Good evening, friends. This space's special session actually is dedicated to the good health of my dear friend for more than a quarter century. This dear friend is a trader, and he was a trader friend of mine since 1997. And both of us were always on the same wavelength. And somewhere along the line, I became bearish last year. He maintained his bullish stance, and unfortunately, the other day he called me up and he said he is extremely stressed. And I can understand what a trader's stress will be because somebody advised him that market will shoot up and to 20,000, 21,000, 25,000, and it didn't happen. And he continued his positions. And the other day, when market collapsed, that gentleman, this broker friend, told him, "Get out of your positions." So he called me and asked me what I should do, and I told him this is the worst time which you can think of. Only an enemy can, ask you to get out at this level, whereas a friend would have advised you to get out long ago. Uh, anyway, what happened was subsequent to that was the next day, that was 3 days ago, he collapsed and he was rushed to the hospital almost half dead. He collapsed because of heavy stress, because of too much positions, and he was long and he was wrong. He was advised by his friend all the time, and his friend advised him exactly opposite. And here I was telling him to hold on. In fact, I did a special thread on the 10 stocks which are selected among the 50. That was actually because of him. And I told him to take those 10 stocks. In fact, I have also bought those 10 stocks just as a solidarity with him. I normally don't ask people to do this, but may I request all of you to think of him in your prayers. I want him to get well. He's, after all, a fellow trader. He's a friend, of course, but more important, he's a fellow trader. And sometimes, wrong advice, extraordinary advice being given when market is very bullish at 18,500 to take long positions and 15,400 to take short positions, extreme numbers. That time it was 25,000, this time it is 10,000. So that can put a lot of people under stress, and even experienced people. And he's a 25-year-old veteran. So may I request you people to just think of him during his prayers. I wish he gets back. So now let's move ahead with that thing. Uh, if you look at 1 year ago, I was not on Spaces. I was in Clubhouse sessions and on Twitter, continuously telling people that inflation is rearing its head, and inflation will eat up every one of us. In that sense, purchasing power will come down, and therefore inflation will be a monster which will also attack the stock market sooner or later. Now, how did I say this? I said it because there is something called CRB index, which consists of about 19 stocks. And looked at it and made a mention. I analyzed based on that. Before that, let me also tell you that during that time, a lot of trolls, as usual, opposed me, saying it was deflation, and the central bankers talked of a little bit of inflation or transitory inflation. So there was a battle between deflationists, which were the central bankers, and inflationists, a minority of people like me, who had data. Fed had data, but they wanted to overlook it. And now today it is the same thing, but it's exactly opposite. Today, the inflationists think that inflation will never come down, and people like me who are in the deflation camp or disinflation camp, I would say, as you are very confident that the inflation monster is dead. It has committed suicide. So nobody has killed it. It is like, they say in the stock market, the bears kill the innocent investors, the bulls kill the bears, and finally the bulls commit suicide. Nobody kills the bulls. The bears can't kill the bulls. The bulls will commit suicide. So inflation has committed suicide. So let us have a 1 minute silence for those for inflation monster, and we don't want to see here again. So this is the title with the question mark. Now, my name is Vijay. I've been in the market since 1991. Survived these 3 decades successfully. I'm alive to talk about markets today. With me are my 2 close friends. They are my co-hosts, Vipin Bhai, who's the most trolled person. If there's an Oscar for getting trolled, I think Vipin Bhai will win it. And But he's a brilliant analyst, as I keep telling people. Among the 30 years of my time, if I were to put top 10 analysts, Vipin Bhai will be one of them. And I say it without any, let's say, hesitation. Then my other friend from Hyderabad is Vinay, whose age is less than my experience, but he's a very sharp guy. I was never as sharp as that as Vinay was. Vinay is. So I'm very thankful to both of you to be my co-host. This session will be for 2 hours. The first 20 minutes, beginning now, will be mine, and then we open for Q&A and discussion. You see, I've been conducting spaces in Clubhouse especially for more than nearly a year, and I have been heavily criticized by my friends. The main criticism is that I'm too liberal. I allow other people to speak even if they speak nonsense. My friends are saying, why should we come to your spaces session? We want to hear you. We don't want to hear people who speak, who don't have, what shall I say, respect for others' time. So I made a compromise. I told them that, okay, I am a Democrat, so I allow all opinions to come. And I listen to it, even if they're slightly, what I would say, cranky, or let's say they try to troll me or try to be sarcastic and all. I just listen to them. But nevertheless, you see, I have to also respect listeners. So I made a compromise today that the question answer session or Gyan giving session by any of the participants will be limited to 2 and 2 minutes. I don't want to be rude, but unfortunately, I'll have to cut you people. I never cut anybody off, but I think we'll have to start. We'll have to begin somewhere because this is a very genuine criticism. I don't want to lose my friends. So that is the reason. So I hope you'll respect it. So after 2 questions, we will push it down to as listener. So please don't mind it. Okay. So then let's go back to a basic definition of deflation. So deflation is basically a decrease in general price levels of goods and services. This is what the Wikipedia and Investopedia says. Basically, when inflation comes below zero, that is negative inflation rate, then you have deflation. Disinflation, of course, is preceding deflation. Disinflation is a slowdown in the inflation rate. So I assume that we will start from inflation, go to disinflation, and finally land up in deflation. So as I was saying, in mid-2021, the CRB commodity index, which consists of 19 commodities, aluminum, cocoa, lean hogs, natural gas, gold, heating oil, cotton, crude, gasoline, silver, soybean, sugar, and wheat. These are some of the 19 commodities. And this is a very good indicator of where inflation is going. And inflation had doubled. The CRB index had doubled from 102 to 200 and odd by May of 2021. And any sensible analyst should have looked at that and got scared because the basket has doubled within less than a year, from a little more than a year, March 2020 to May 2021. And that is when I got scared and I started talking of inflation, high inflation, stagflation. People challenge me on that, but then anyway, I have to look at only data. So my data clearly told me, or my interpretation of the data clearly told me that we are in for a tough year. That is why I became extraordinarily bearish, and I wrote that 2022 we will see a 25% drop in the Nifty. So that was what it was. And if you really look at the last time inflation, which had shot up like that, was 2009 to 2011, where it had gone up by 86%. Here it was talk of 231%. This CRB index finally has topped out at 330. Currently, it's at 309. 330 when there was absolute panic in March. So that is what happened. Then I also looked at a chart of lumber. Lumber is wood, basically, which is very an important commodity in the housing sector. And housing is big in the US. So lumber had just risen like Burj Khalifa. It just went like a skyscraper. And I knew that there will be a lag between the price of lumber and actually feeding into inflation. So that was a thing which I think even the Fed looks at it, but nobody seemed to bother. Of course, in India, we don't look at lumber. But that was very shocking. And I knew that if lumber is going to go up like that, you can have a look at the chart, lumber chart. you'll notice what I'm saying. So therefore, lumber was the first one which rose. Today, lumber is the first which has collapsed. It has now gone back to the other side of the Burj Khalifa. You have the left-hand side which goes up and the right-hand side which comes down. So Burj Khalifa is complete with lumber having come back to the starting point. Then let's look at other commodities. Take soybean. Soybean is one of the most commodities which is in US. It's very popular, not so much here in India. It's dropped about 11% from the all-time high. Sugar, which we all consume, which we like, and which people said government is doing a bad job by putting restrictions. Sugar has dropped 62% recently from the all-time high. In March, it had gone up. From March, it has come down by 62%. Wheat. Wheat is supposed to be a commodity which was supposed to create havoc because of this war. Ukraine and Russia were the biggest exporters of wheat. Russia is the largest exporter of wheat, incidentally. Ukraine is the fifth largest exporter of wheat. So when the war started, people said, boss, wheat is not going to be in supply. So you will have countries going into famine. In fact, in Africa, there are countries which import 100% of the requirements from Ukraine. 100%. We don't import, we export. So South Africa, for instance, I think it imports about 40% of its wheat and all from Ukraine. So there was this feeling that with this Ukraine war, there will be no more wheat coming out of Ukraine or Russia, for that matter, and people are going to starve and die. Sure enough, wheat went up. Now what has happened after March 22? Now wheat has come down as we speak, 28%, nearly 30% it has come down, 30%, and nobody seems to have noticed. Then you look at palm oil. Palm oil, I think Vinay deals with palm oil, and he is a very keen follower of it. And palm oil, there was when Indonesia banned palm oil, there was total chaos here, and all the FMCG guys here raised their prices. Today, there is a panic in the reverse side. Today, as we speak, palm oil is down 38%, nearly 40% it is down, 40% from March levels. And today, Government of India has twisted the arms of the FMCG guys, and your palm oil and oil prices, edible oil prices, have all been brought down. And they will twist their arms further because this palm oil is now into a deep bear market. So any rally will be only a bear market rally. So you will see palm oil really collapsing. So therefore, you now have wheat collapsed, sugar collapsed, palm oil collapsed. Now you look at corn. Corn is again an important ingredient. That's down 13% from the all-time high. Coking coal, which is an industrial commodity, which people said, that will feed into all kinds of goods and services. So coking coal is 40%. Aluminium, which goes into making of everything. Aluminium is like, it is there in every product which we use. 30% down. Iron ore, again, important input, down 40%. Steel, which goes again into our day-to-day life, 33%. Copper is called Dr. Copper because it is there. It is a weather vane for how the industry, how the industry is functioning at any point of time, down 22%. Every single one of these commodities, which are major commodities, which should feed into inflation, are all dead. 22% is the lowest. Okay. So we are now talking of situation where we are seeing that everybody is talking of inflation. Everybody is talking. Inflation is yesterday's story. As I jokingly say to tell people, inflation is, inflation because you look at the charts. Vinay looks at the charts. Vipin Bhai looks at the charts. Our neighbor, for instance, feels the effect of inflation. He doesn't call us for a cup of coffee because he wants to save that money. Neighbor's wife, she goes to the vegetable shop. She knows what inflation is. The neighbor's dog also knows what inflation is because he's getting a smaller Parle-G, right? Because those guys have made the biscuit smaller. So even the neighbor's dog knows inflation. So when the neighbor's dog is knowing the inflation, then what is new about it? So now we should look at what is happening to inflation. Inflation, clearly, only a blind man will argue with me that if the inflation has not peaked out, because it's not one commodity. I have named at least 10 to 15 commodities, which are clearly down by 20% plus. And 60 is not a small thing. Even Zomato might not have fallen 60%. See? So therefore, that is as far as inflation. So somebody talking to us about inflation, I think it's gone. I don't think we should even look at that. That's rear view mirror. If it is going to come back, it will only be a bear market rally. Now uh, now people are trying to convince us that okay, there will be inflation next 3 months, there will be recession and all that. Again, recession. What is recession? Recession is 2 quarters of negative growth. Now everybody knows what I mean. That recession is coming. Again, we have had recession, and we have the market has moved on in the past. It is not that it is not something which has affected the market in the past in the last 20 years. I'm talking of. So this recession is a very nice thing to talk on CNBC in Indianomics and discuss with some people will come from some strategists and analysts will come and all that. At the end of the day, how much does it affect us? That is important, and therefore, what will it do to the prices of our regular day to day, and what will it do to the stock prices? So that is what we should be looking at as stock market people, not worry about those people coming and talking some economic theories and all that. At the end of the day, I also have done my MBA from Jamnalal Bajaj. We were taught, but at the end of the day, what we were also taught was, these economists, if they can't convince, they will confuse. So I am very sure what they are doing now is confusing us. So let's not get confused here. So there, you look at our India itself, India specific. You see, most of the people around the globe, the media or the opinion makers, are very jealous of India. Why? Because we are people who have not supported Ukraine, neither Russia. We are getting the best of the both worlds. Best of the both worlds. We are today, our Russian coal imports, we have now in the last 3 weeks gone up sixfold. Oil buying has gone up 31-fold. Okay, that is the kind of benefit we are getting. And Russia at one time said they will give a 30% discount on oil, 30% discount. Now I don't know whether the 30% discount is there or not. Nevertheless, we are getting it at lower prices, surely from others. In fact, latest last month, I think Saudi Arabia was the second largest supplier of oil to us. Now it is Russia. The first, of course, is Qatar. So that is no, sorry. First is Iraq. Sorry. So therefore, that is as far as the macros are concerned. Look at market related. I mentioned this in my previous spaces that the sentiment is extraordinarily one-sided. Extraordinarily one-sided. What we saw, the cash levels are what we saw in 2001. That is the 9/11/2001. See, unfortunately for a lot of people, I have been in the market since 1991. So I know how things were in 2001, how they were in 1991 or 96 or any other time, and I remember it like like it happened yesterday. I can tell you, I've never seen in my this one, I've never seen such a negative sentiment in the media, in social media, in I don't know, in years. Of course, social media was not there in 2018 and before. I mean, I was not participate, but I'm just saying the kind of the ferocity of the bearishness is enormous. Now, what I can only say is that fundamentally, macro-wise, the indicators are looking good. You take the war premium is there still. Now, the way the war is going, it is a matter of time before the Ukraine will have to surrender. If once they surrender, then there is a question of the war premium going off. There is a typically a war premium of about $30 on the oil. That is what they say. Then we are going to see oil at 80. I am fairly certain it will at least go to double digits because the way the pattern is, oil incidentally, today as we speak, it is 22% down from all-time high. So 22%, any technical analyst will tell you is a bear market. We are not seeing Nifty going to 22%. We have gone 22%. And the way oil is going, which I mentioned in my last spaces was that most of the strategists today, the number one asset class in which they're long is oil. The number one asset class. So therefore, they are the weak guys who are sitting there. Now the suppliers are going to supply, and the commercials, as we call it, they are going to supply the oil or the contracts, and these guys will not be able to hold up because everybody is long oil. Similarly, in Indian markets, if I look at the sentiment meter, it is talking of yesterday was day for yesterday or something was 16 was the sentiment meter, which meant extreme fear. Below 30 is extreme fear. This was seen somewhere in March 2020. My friend Prashant is here. I think I saw him. I don't know where he escaped now. Prashant is a damn good analyst, and I had requested him to give me data about what proportion of NSE stocks are 50% and below. That means they have dropped 50%. So we did a study across time frames, and as we speak, minimum 50% of the stocks in NSE, all listed stocks in NSE, are down by 50%. Minimum, I'm talking. The stocks were down 60, 70, 80, 90, but 50%. The last such a number was seen was in December 2016. Of course, there was a larger number seen in March 2020, but that, whatever bear market you may call it, was like a flash crash. So you exclude that. I'm talking about typical good bear market, which we saw in December 2020, 2016. The number was comparable. In fact, that number is less than a current number. And what we saw in 2017 was a 40% rally in the Nifty. So there were many other events which might have taken there. But at the end of the day, the FIA numbers were actually for 4 years, 2015, 16, 17, and 18, were negative in India. People talk of negative FIS numbers now. We were negative lakh and 36,000 crores over 4 years. Somebody the other day challenged me saying that we should look at SEBI figures. We should not look at SEBI figures because SEBI figures contain even IPO numbers. We are now talking of like to like, which is what is only secondary market numbers. Secondary market numbers 15, 16, 17, 18, 4 years. 4 years, we saw a negative number. We don't talk about it. We think that FIs are going to kill us. Sorry, we have seen this. In between 15 and 19, 14 and 20, 2014 and 20, there was no QE. You ask the specialists or the experts, they talk of there was a QE for 12 years. There was no QE between 14 and 20. There were 9 interest rate hikes between 2015 and 2018. 9 interest rate hikes. Today we are talking of only 3 ago. 3 have happened. Then there was a quantitative tightening in 2017-18. So what we are talking today has already been witnessed by us between 2015 to 2018-19, and we have seen the markets going up independent of all these things. So when people now talk of, Nifty will go back to 14,800, 14,000, 13,000, 12,000, 11,000, 10, 7,500, I wonder why, on what basis? On this piece of information, when inflation is collapsed, how can you think that the equity markets are going to go to those levels? Some new information has to come for the market to go up. Now, my guess is as good as that great analyst's guess is, who's setting up on social media, on print media, or on electronic media, or through spaces, clubhouses. Everybody seems to be very clear. It'll go to 14.8 is first stop, second stop 14, then 13, 12, 11, 12, 9, 8, and finally end up at 7.5. I can argue that it can go even to 8.75. 8.75 is the lowest Nifty has gone, and I was trading during that time. So one can argue for anything. I can argue saying it can go to 8.75 because I've seen 8.75. But what is the probability? The probability when inflation is dead and deflation is probably going to come, and we are now going to get into disinflation, I doubt very much we will anyway go anywhere close to the numbers which people are talking of 12,000 and below. Most people are talking of 12,000 and below. They're not even talking of 14,000. 14,000 is history. They've all gone there. So therefore, let me end here. I've finished my time. So may I request Vinay? We'll plan it this way. Vipin Bhai will close the session whenever we close the session with his commentary. In between, he can, of course, intervene anytime. I will now sit back. Vinay will take over. If there are any questions addressed to me, I will answer. Otherwise, it will just go on. It could be addressed to me or Vipin Bhai in this case. Vipin will close the session, maybe
Okay.
10:30. Thank you very much. Yeah.
So, hi there. So I am CFA level 3.
No, 1 minute, sir. Hold on, sir. Hold on. Sorry, sir. Black Swan. Just a minute. Let the co-host and the moderator Vinay take over. He will give opportunity to every one of you. I promise that everyone's question or thing will be answered. That is my promise. Thank you.
I request everybody to keep the summary and summarize their comments, please. Maximum 3 to 5 minutes per person. Thank you. Thank you. Mr. Blackswan,
No, I'm talking of 2 minutes. No, 2 minutes only, Vinay.
Yeah,
We'll
2
come
minutes.
back.
That would
If
be.
there is time, we'll come back. Please, let's not
Yes.
go to 5 minutes. Yeah.
Yes, sir. Yes, sir. 2
Okay,
minutes, please.
I don't want. I mean, I'm just a financial analyst of some sort. I work in an investment bank, and this is my. This is a subject which I'm very keen on. Now, to your point on 7500, I think my assumption is it will come, and the thing is that the markets that you see today are in a very different regime than what you have mentioned. The major reason is that we are having an ongoing war with Russia and Ukraine, and if you've seen Putin's statements on the economic speech that he gave a few days back, he's war gamed it to a very good degree. So if you look at, if you've seen financial commentary, in financial commentary they talk about regime changes. So I think we have a massive regime change, and if you look at the commentary of the Federal Reserve Chairman as well, Jerome Powell, you can see that he too is looking at this in terms of saving the US dollar per se, as in saving the system. These are very large macro themes, and when there is a macro theme that you are looking at, you would only look at how filled up. For example, let's give a analogy of a theater. So if you see FIIs, if you see retail investors, if you see everyone, when they enter a theater, they enter through a small door. Now, since India is a growing economy, or the world at large is seeing growth for all these years, you've seen a lot of people enter and make investments in the equity market. Now, because of all these factors that are coming back again and again over time, I think the pot is clearly boiling. Geopolitics itself is a very big hot plate, and inflation is also a very big thing. If you see Europe, the inflation numbers are very, very high. German PPI, for example, purchaser index is 33%. At 33%, at these large numbers, industries usually die. So this is genuinely a very much a regime change in that sense. I'm not saying there's anything fundamentally wrong with India per se. India actually is a beneficiary here. But the thing is that now that if you see a theater is filled up, filled up with a lot of people making investments, and it's only a matter of time wherein the fire, if there is a fire, that everyone wants to exit at the same time. And like you saw in COVID, you had a flash crash. You might have something similar that will happen here because of the panic that is there. It might not be anything relationally in terms of terms of fundamentals. There's nothing wrong with India. I think we are in a very good spot. In fact, our inflation also is not. We won't have inflation because we are getting a lot of things cheap, and we are actually getting a lot of things. Other than oil, you have fertilizers and raw materials for all these things. So is there nothing wrong in per se with India? The point is the globe has changed, and with higher interest rates, and if you see in terms, one last point I want to mention is about the kind of debt levels each country has, and the Western world has filled itself up with debt, a lot of debt, in fact, and the levels of debt you've seen today are not. There is no comparison. There is no comparison at all to what I think these are not levels we've seen in World War II as well, in terms of if you compare it with as a percentage of GDP. So I think somewhere all of this will stick in the Western world, and we'll face the repercussions of that. That is my take over here.
Fine. Yeah. Thank you, Mr. Blackswan.
Thanks. I'll just rebut your points very quickly. See, now you are saying Putin is war game. You will have to accept that the markets are superior to you and me, right? So the markets people will know. If he has war gamed, as you are suggesting, they will know. So it will get reflected in the prices. Tell me, which is the continent which will get most affected by Putin's actions? You'll agree it is Europe. You'll agree. And you just now talked of Germany. Germany is, you said the industry has to close down because that is the kind of numbers. Kindly go and check DAX, which is supposed to be the indicator of the German industry. DAX has made a new low in March. It has not made a low. It has not cut that low as we speak. So therefore, there are some things which are beyond our understanding and comprehension. We may think that this is, Putin has done this. I know it, you know it, but the market says, I don't care. And that is what it is. And therefore, in talks of America or talk of, the interest hike and Powell, the market knows it, right? Market is saying that next month they're going to raise it 75 basis point. Then why is the market not collapsing 20%, 30%? It has happened before. Markets have collapsed 20%, 30% in a matter of days, including India. We have fought a war, Kargil war, where the markets never moved. No, you can't say in 1999 the markets were immature. I was sitting in the market and monitoring the Kargil war as well as trading. So war per se means nothing. 2003 Gulf War, the markets never moved. So we cannot equate wars or any catastrophes to saying that market has to behave like this. Markets are not behaved like that. The markets are not behaving like that today. That is important. If you do not want to believe that the markets are not superior or markets are not willing to factor in the news, then I perfectly take your point that we may go 7.5. Then the easiest thing to do is to simply go and take a put option of
whatever. Agree.
Right. So it's so simple, right? But markets, my experience is, I don't have too much experience, only 31 years of experience, says that markets are never simple. They're never simple. Markets will have factored in mostly everything. They may be slow in moving, but they're not factored in at all. Equity markets are the slowest. The commodity markets are the fastest, always. So commodity markets have told us last year that inflation is coming, and now they're telling you deflation is coming. Now the choice is yours. If you don't take it, don't take it.
I just want to rebut to this. Two major things that you touched on. Whether firstly is on war. I mean, a war per se shouldn't be a problem. I mean, it shouldn't affect. Of course, the markets go up during war as well because a lot of bullish things happen because of war. But over here, what I want to stress on is that how the oil prices and the gas prices reacted to this particular war, wherein the gas price went up 4 or 5 fold in Europe. And the oil price, of course, you all know it went to 120, 134. And if that is one thing I wanted to stress. And secondly, the effect of the quantitative easing in US and the quantum of it. It was a very large number. So 6 to 7 trillion only in the United States was pumped into the market, and the mechanism of pumping in was also very efficient. So it was you see that the $2,000 checks were sent to each family, and you had multiple times it was sent. I think the last being sometime in March 2021. So these are massive liquidity injections into the economy that drove this. Price.
Yeah. Black Swan, I understand what you're saying. Probably you did not listen to what I said. See, hearing is one thing, listening is another thing. Yeah. I have given you data. I have given you data of today vis-a-vis what it was 3 months ago. So if you still feel that with the market, with the prices having come down, incidentally, oil went up to $138, not 134. So let me correct you because it's important we know where it has gone. And today it is sitting at 109. So if in spite of all this, it's sitting at 109, there is something to think. Well, I take your point. Let's leave it at that. Let's go ahead. Thank you very much on that.
Yeah, thank you.
Next, the man who never shorts.
Hi guys, my voice is clear?
Yes, we can hear you. Please go ahead.
Okay. Actually, मेरा क्वेश्चन सबसे है इधर कि सर आपको लग रहा है कि डिफ्लेशन आने वाला है. So if we are talking about like let's say कि इन्फ्लेशन का सबसे बड़ा इफेक्ट पड़ता है फूड पे, like food crisis जब आती है तो prices बढ़ जाते हैं, people are not able to afford that. It happens during the supply chain issue या war कुछ हो गया. So looking back last 3-4 years, the food crisis had already started much before COVID happened, and supply chain issues तो थे ही पहले से. If you see, most of the crops were failing because of the climatic changes, global warming आप पकड़ लो, or even you say a lot of new diseases were coming out. So because we are growing a same kind of a crop all over the world, जो एक high yield का होता है, we are growing that only. So a single disease comes and most of the yield gets wiped out. So now these things have actually grown more severe. जब COVID हुआ, everything shut down. Now second is कि जब war शुरू हुई, so Russia and Ukraine, they are one of the major exporters of wheat. Like they feed most of the world. So उन लोगों ने उनके ports बंद कर दिए. which was like their strategic advantage जो वो लोग रशिया यूज कर रहा था. So which actually made sure कि ये crisis और ज़्यादा deepen हो जाए. So even if this war gets over, and if Ukraine is allowed to release जो उनका granaries में grains पड़ा है to the rest of the world, but still जो जो sowing season था, most of that is missed out. And एक चीज हम लोग को ये नोटिस करनी है कि वर्ल्ड में इनफ ग्रेन्स है टू फीड द वर्ल्ड, बट द प्राइसिंग इज वेरी डिफरेंट बिकॉज लो कॉस्ट प्रोड्यूसर्स में यू गेट इंडिया, यू गेट यूक्रेन एंड रशिया, बिकॉज दीज आर द कंट्रीज जो एक सस्ते दाम पे आपको वीट दे देती है. एंड इफ यू गो टू यूएस साइड, उनका प्राइसिंग बहुत ज्यादा हाई होता है. सो व्हाट द फार्मर्स ओवर देयर डू इज वो लोग 50% अपना बायोफ्यूल के लिए लगा देते हैं ग्रेन्स, बिकॉज उधर उन लोगों को प्रॉफिट कमाने का यही ऑप्शन है, बिकॉज उधर इतना डिमांड होता नहीं है इनका प्रोडक्ट्स का. सो दे आर यूजिंग इट टू प्रोड्यूस बायोफ्यूल. सो हाउ एक्चुअली दिस सिनारियो ट्रांसलेट्स इनटू डिफ्लेशन में मुझे वो समझना है. I hope you got my
Very,
question.
very simple. No, no, very simple. See, I only look at prices. Okay, you are given some explanation. I can give a counter explanation. The final decider is the price. Just kindly look at the price. Only price decides whether inflation or deflation. No, what is inflation number? Number is a price, right? Deflation number is also a price. It's a percentage. So you kindly look at the prices. The prices have fallen down. If you say, if I say wheat has fallen, which you talked of, has fallen, say 28% from March. You talked of granaries of Ukraine. You talked of Ukraine, which I already talked about incidentally. I don't want to repeat it. If some commodity has fallen 28%, would you call it inflation or deflation? You tell me.
No, actually, I'm not talking about the price at all. मेरा question इस पे है कि
Arey Baba, if you don't talk of price, how do you define deflation? What is
because
deflation?
of price,
What is inflation?
क्योंकि
Yeah, sorry, continue, sir.
hello,
Yeah, continue,
क्योंकि
continue.
सर because these commodities are being traded, so उनके price fluctuate करते रहेंगे. But I'm just asking as a perspective कि अगर ये crops का issue, yield का issue पूरे दुनिया में है, like India just got heat wave and उसकी वजह से हम लोग के भी yields drop हो गए. So isn't it like indicating towards कि ये crisis आगे बढ़ के और चल के और बढ़ने ही वाला है? Because you are saying कि
Sir,
short term में prices can drop.
No, sir, it is not short term. Please understand this. See, what you are telling, the market knows it. See, you must respect the market. We don't, we think only I know, you know. Okay, it's not that way. The market, see, when on mandi pe jo prices bante hain, kaise bante hain? Basically, supply and demand. If mangoes are less this year, the price of mangoes goes up. You accept that? The same thing should go up. No. If there is a heat wave, is what you're saying. There would have been a heat wave. I'm not denying that. But what is coming to the mandi? If the mandi, there is a huge supply and there is less demand, obviously prices will fall down. That is the basic economics 101 which I've been taught. So I am seeing a significant drop in prices, which I read out. And therefore, if people do not want to look at the prices and say, I don't care about the prices, these will fall short, it's okay, it's debatable. We will know it 3 months later. We'll know it 3 months later. As to the market is screaming at you. The market is telling you inflation is yesterday's story, tomorrow's story is deflation, today's story is disinflation. We are not yet gone to deflation. We are still in disinflation, which is a negative inflation in the sense a drop in the inflation number. We are only there right now. Deflation will be when you go to zero. Zero may take maybe a year time, or say, is there something in which? What I'm trying to say is inflation is over. That's what I'm trying to say. And how am I saying so confidently? Reflected in the prices, not one, not two, 20 commodities I can give. That is the point I'm making. However, we can disagree. There is really, I mean, after all, discussion means disagreement also should be there. It cannot be only that you and me agree and go home happily. We should go home with some thoughts in our mind and just think. Look at the charts. Look at what happened before 2020. Look at what happened 10 years ago. Then probably it'll open up our minds, not only your mind, my mind also. Yeah, let's go ahead, Vinay.
Yes, sir. अपने मिस्टर नितेश अवंतकर.
Yeah. Thank you, sir. Are you all able to hear me?
Yes, please.
Yeah. Okay. So thanks a lot for giving me an opportunity to talk. Actually, I agree with Sainik sir on the goodbye inflation and welcome deflation. But my take is uh, maybe we may not see Nifty going back to say 18,000 levels. And my take is because from an index level, because the IT stocks valuation were pretty high, and I work for various IT companies, and I've lived in abroad as well for almost 6 years in UK, and the valuations was very stretched, at least for large caps, and that is where maybe it's always markets are supreme. It's very cyclical. Maybe select stocks might do very well, but for Nifty to go back to 18,000 is quite difficult, because I don't see a point of giving valuation to say companies like TCS, Infosys at 40 PE, where at ground reality employees know how things work in IT services company. So Nifty at 18,000 with those levels look very stretched for me. And to make money in these kind of markets, my feeling is we have to go with numbers like how Sainik sir always provides, and be we have to pick individual stocks like in this kind of commodity downturn cycle. Auto stocks, select auto stocks might do well. So would be banks and so on, and then that's the best way to make money. That's all I have to say. Thank you.
Yeah, thanks, Nitesh, on that. Certainly, we can, I mean, debate whether it'll go to 18,000 or 7,500. Everybody has got their own opinion. As I said, I can argue for 875, 875, not 7,500. Okay, I can tell you why Nifty can go to 875. Okay, so let's leave it aside. Just I'll give you some food for thought. Thank you for saying that I provide data. Here, let me give you some data here. Take Nifty. Nifty is 50 stocks, 100% total weightage, 100%. What is INFI? INFI is about 9%. What is TCS? About 5%. 9 plus 5, 14. Other than that, the Wipro and all are less than 1%. So 14% may not perform. 14% of Nifty may not perform. 86% is still there. You got Reliance, 12.5. You got HDFC Twins, which are about 15%. Kotak is there, L&T is there, Lever is there, ITC is there. These top 10 contribute about 60% to 62% of the weightage of Nifty. So it can just happen that certain stocks in this can take the Nifty up. If you have been in the market for long, in 2018, for instance, the Nifty went up, small cap index fell down, and nobody liked Nifty going up because only some 6 or 7 stocks went up. They were called the Ritik stocks. H for Lever, R for Reliance, I for Infosys, T for TCS, H for HDFC Bank and HDFC, I for I don't remember now, K for Kotak. So only about 7 or 8 stocks took up the Nifty. So Nifty, to that extent, can be taken up. It can go to even 18,000, or it may even cross the high if the other stocks fire. These stocks may not perform fire. In fact, I am also not bullish on IT stocks, but some other stocks can fire, which has happened in the past. So we should keep an open mind. I'm not saying it'll go there. I'm not saying it'll go this way, but I'm just giving a perspective. Yeah. Thank you.
Thank you.
Thank you, Mr. Yognanda. Mr. Yognanda, please.
Yeah, good evening, everybody. I hope you can listen.
Yes, please go ahead.
No, I was listening to Mr. Sainik. Yes, he has a point. I have a question and also my opinion. See, India is now importing, I think, close to a million barrels per day from Russia at $25 discount. So yes, we are at a much sweeter spot. And somebody else also spoke about our agriculture and the ban on the exports. I came a little late, but my opinion is I think the world order is going to change. We are going to not be US centric, maybe after some time. Yes, I also have this question. Will deflation come to a stage where interest rates stop going up and start coming down and bring growth again? Thank you so much.
Yeah, thanks, Yogananda sir. See, my thinking is interest rates have peaked out. Now, this is a very, very unpopular suggestion. I unfortunately land into these unpopular suggestions. Last year, while everybody talked of deflation, I was talking of inflation. This year, everybody is talking of inflation, I am talking of disinflation. So I believe that the RBI will pause sometime soon. Why do I say so? Apart from the prices coming down, whether it's a trend or not, we don't know as of now. But just look at the 10-year yield. 10-year yield has made a very bearish pattern. If you follow technicals, it's made a very bearish pattern, and it has followed up with that bearish pattern today. So you will see the RBI getting up. In fact, I was one of the guys who said RBI will be forced to increase interest rates. This thinking I had last year, and I made this prediction on December 28th of 2021 on my Twitter feed. So if you see today, 10-year yield is a damn good indicator to know where the interest rates will go. So today we are sitting in exactly where RBI increased that interest rates in May, where they shocked us. It went to that day. It went up to about 7.4. Today we are sitting at 7.4. Again, it went up to 7.62 or something like that. So if you look at the chart, it looks like we are in a downward drift. Maybe we will stall here. Maybe there will be one more interest rate hike. But I think one and done, I suppose. I mean, the next one and done. I doubt very much we'll have a further interest rate hike. In fact, even Fed, I don't think we'll have more than 2, 3 more. They're talking of 9. I doubt very much because there will be no need to have that interest rate. See, there is something called demand destruction which people forget. See, people talk, oh, oil will go to $240, $500, $600. They think it's an Excel sheet, and you draw something and it will go anywhere. There is something which we learn in our college, Economics 101 is demand destruction. When people will say, let's say oil, let's say theoretically goes to, people are talking of 600, 700, say $250. If it goes to $250, I will wonder how many people will do their discretionary traveling. You see, because the prices will be so high. So you can't do discretionary traveling. So straight away demand falls. That's exactly what has happened in other commodities. There is a resistance that is not only in stock market, not only in stock prices, you have resistance even to a commodity price. Because if you say the edible oil, I'm going to quadruple it suddenly over a period of time, you quadruple, people will not feel it. But if you suddenly quadruple it, people will say, I'm not going to use this. I'm going to use some substitute. Then the demand destruction will happen. That is a nature of the cycle. It is not I have invented or you have invented or anybody has invented. It will happen. If you raise the bar too high, when you're jumping, doing a high jump, when you raise the bar too high, you will not be able to jump. You will say, okay, boss, enough is enough. Okay. So that is what will happen to everything, including your stock prices. Why will you pay extraordinary prices? Maybe in a bull market you will pay. Today you are not willing to pay, right? Why? Because you feel I will use the money for a better purpose rather than going and buying stock prices at these prices. That's so I am fairly bullish, sir, on the interest rates hikes stopping next one, and then it will pause. So it can happen that the prices go up and all because of new inputs. Let's say there's a war between China and Taiwan, or there is a nuclear war between US and Russia. Then you see that we are not factored. Market has not factored that in. But without, see, I don't know, you don't know, nobody knows that. But if you say, no, it'll go to 7,500 because of already data which is available, I don't think so. Market never reacts to the same thing twice. I'll just find one example I'll give you is in 2020, when the COVID came, everybody panicked. Everybody panicked because they thought we are all going to die. But if you look at March, April, May, June, nobody died by COVID. The COVID cases were less than 1,000. In 1 year later, and the market collapsed. Even before the COVID, anybody got affected by COVID in India, or there may be 300 people getting affected at that time. Whereas 1 year later, 5 lakh people officially died. It is probably 8 times that. 40 lakh people died in India. What happened to the market? The market didn't move. The market was in a sideways zone. So the market never reacts to the same news twice. That is the beauty of the market. So you can't scare the market twice. So if you're going and telling me inflation, Powell said this, that fellow said this, Arey Baba, it's already known. There's a known devil. Known devil, market will not react. It'll manage a known devil. Unknown devil is where the problem is. Right now, unknown devil means both of it is unknown, right? So why worry about something which is unknown? Yeah, thank you.
Yeah, so to conclude, is it, I presume, that we may have just some downtrend and we could, see some better times for the market in a couple of months?
Sir, I'm very bullish, sir. I was very bearish from last year till May 12th when Nifty hit 15,800. Subsequently, I did my analysis. Since then, I have been unequivocally bullish. See, today people say you should be cautious. At this level, if you're cautious, you should be cautious everywhere. Why should you be cautious at this level? At this level, you should sell your mother-in-law's jewels and invest in the market. That's what I say. I'm not asking you to do it.
No, no,
I
thank
don't
you.
have my
No,
mother-in-law,
no,
but I'm just saying what I'm
yeah.
trying to say is what is that opportunity is when there is fear. Today, you tell me which person on going on TV and telling you, let's go ahead and buy. The same guys in October of this last year were saying buy because India is a great growth story. Today, they're not saying that. Today, India is a great growth story because inflation is collapsed. You should be saying on TV that you borrow and buy.
Okay.
I'm not asking anybody to do that. I'm just incidentally this mother-in-law thing is told by a very wizened old broker on the Madras Stock Exchange to me many years. Basically, he said when you say sell your mother-in-law jewel means mother-in-law will not give jewels to you. Okay, so you better steal them and sell them. Basically, it means you're so sure that you'll make money and you can return the jewels to her. That is the whole purpose. Not that when I wrote that, people said, "Why are you selling mother-in-law jewels?" My mother-in-law doesn't exist.
Anyway, thank you so much. Interesting. Thank you.
Thank you. Mr. Ravinder Bhandari.
Yeah, I guess everyone can hear me.
Yes, please.
Yeah, so few things we were talking about commodity. So commodity actually the prices have come down dramatically. I don't track agri commodity, but base metals, say aluminum is about only 5% up in a year. Lead is multi-year low. Zinc is bit high. Zinc is bit high. Copper is again yearly low. So what after two rate hikes, as Mr. Sanik was pointing out correctly, once the easy money things being taken out, whatever speculative driven commodity price which we were saying, that chain has been taken off. Only few base metals are still holding intact that might have pressure in terms of margin for few of the metal consumer, because say if we take steel, lots of things happened there that prices have come down, but many auto consumer or other steel consumers, they still didn't pass on the entire commodity inflation to the consumer. Say we have WPI at 15%, CPI at 7-8%. So that difference is reflecting in few of the commodity users in terms of pricing on like passing on the prices. For India, the only bigger worry is how the oil will pan out, and no one knows how it will pan out. Once it goes 60-50, then all the GS of the world talks about 20, and once it goes 80-90, they come up with a report of 100 and 200. So no one knows how the oil will pan out. Another interesting thing about oil, what I was hearing from people is, say we are discussing that 1 barrel a day we are getting from Russia, but how it is not helping Indian consumer are that PSU's refiners are being very slow in terms of procuring that rural crude, while most of the capacity has been taken by Reliance and Naira. And since the GRM has been very strong, what they are doing is the refining capacity, quite a chunk of it is being used for export, and they are crying that the margin has been very low on the OMC side in India. So that's the one part of the story. That's why the PSUs are not able to take the full benefit of this high GRM margin available in the market right now. Other thing we were discussing about IT sectors and other sectors, a few sectors which we can, which I am actually very bullish on, is on the discretionary consumption side. The way businesses back on track, GDP growing, salary hike happening, you will see lumpy kind of expenditure from every side, and there has been lots of unmet demand from last 1-2 years. So you will see consumption based theme like auto, something like real estate, though you know not play real estate companies directly, but whatever is, comes as a proxy play, those tiles and home improvement, those stuff you can play. Other thing is autos, the sales number are something which we have seen in 2014-15. So everything works in a cycle. Once you have seen that kind of trough, now only thing it can happen, it can go up in terms of volume of sales. Once the margin is back in,
Ravinder ji, I'm so sorry to interrupt you. Just
yeah,
requesting you, everybody, to keep it short, please, because there's so many people waiting. That's it.
Sure, sure.
Just
Then
wanted
I'll
to
I'll,
inform that,
I'll just
please.
wind up with one or two statements.
Please.
Few of the sectors which I like is definitely the banking. As the interest rate goes up, you will have the margin expansion on the banking side, and India economy can't grow without the support of the bank. So you need to focus on the large private banks. Consumption based theme, you need to be very bullish on. And whenever now that old cycle of very low, ultra low interest rate is out of window, interest rate will be normal, somewhere around 2.5-3% for US, 6 to 7% kind of 10-year GSEC for India. One thing Sainik pointed out was falling in the interest rate. One, we also need to look at the difference which has been collapsing in the 2 and 10-year GSEC of US, which shows that the next year there definitely they are forecasting for a recession or might be reduction in interest rate. And apart from that, whenever you see this kind of thing, now that interest in normalization, those low cash flow yield stock they come down, and something which takes heavy capex because it becomes expensive to build on the capex. So those companies actually come become a flavor. So those also sector you can look at.
Fine, sir.
Yeah.
Thank
Yeah,
you.
thanks,
Thank you.
Ravitaji. Very, very useful, very perceptive. Thank you very much. Thank you.
Thank you, sir. Next, Mr. Arush.
Yeah, hello everybody. So I was listening to amazing, pointers by all the great panelists over there, and I very much agree with what Mr. Senek said. I had little discussion with him last time also in his spaces that I was saying that day that we could see good news in terms of on geopolitical front, and there could be some resolution between Russia and Ukraine. We can say this because all the commodities which are being traded between all these countries are giving a signal, early signal that there could be some resolution over there. So, natural gas, which is the main commodity which is being traded between Russia and European countries, where Europe is also mainly involved. So, natural gas is down around 27% this month itself, which is quite huge. And the second commodity which is involved is crude oil, which is down 7% this week. And after today's fall, it would be around 10 to 12% from the top. So it fell from $125 to almost $103. So correction of almost $25. And the third commodity is wheat, which is Ukraine is the biggest exporter of wheat in whole world. So that also corrected big time last week, and it fell 30 to $60 in recent days. So all this is happening at this time when we are seeing no news in the newspaper about any escalation between the two countries. And meanwhile, dollar, which is also considered as safe haven. Whenever there is any problem in the world, everybody rushes to buy dollar. Institutions go to buy dollar. So when the war between Russia and Ukraine broke out, dollar shot up quite a bit, and it was all there in the news. And now we are seeing complete reverse of it. So it's down 42% today. But if you see from the top, it's down 1% today. And despite all the bad news, it's not able to climb up. And even today, when Mr. Powell had certain comments on inflation, etc. So it reacted negatively. So it's giving a very important signal once again that a sequence of event could trigger stock market, could propel Nifty to go to all-time high. So what could be those events? Starting with crude oil correcting big time. What would be the eventuality of this? Federal Reserve would come in the next month and say that probably situation of inflation looks a bit in control because crude oil has corrected almost $25. Now probably we'll not raise interest rate by 75 basis point. Probably we'll raise by 50 basis point or maybe 25 basis point because all the things don't look so out of control, and commentary could turn dovish instead of hawkish. So market would enjoy that commentary, and it would all the market participants would celebrate that And if that happens, then the second reaction would come in dollar, because when there's dovish commentary from Federal Reserve, dollar should correct, and that dollar usually corrects. So when dollar corrects, it has a negative correlation with emerging market. So emerging market like India would start rising, and in this way, Indian markets are or global equity markets are paced for a very good time.
Fine. Okay.
Yeah,
Thank you,
thank you,
Mr.
sir.
Anish.
Thank you very much, sir.
Thank you. Next, Mr. Dheeraj. Mr. Dheeraj Call. Mr. Dheeraj Call, are you there?
Hey guys, good evening, good morning. How are you guys doing? I got some invite to join, so I'm here for another 10 minutes. But you guys are talking on a very important topic, so I thought I'll just put in a small input. My background, I'm a physician, but I do biotech analytic work. So I will not talk about biotech industry as a reason. So I'm in New York, attached with BlackRock. Just current macroeconomical conditions, I just heard some people were talking about. Definitely, the oil price is down. There are many reasons. It's not that we are out of the woods right now. That's why you're seeing that supply rise side is being worked on very hard, including in US and in Saudi. Conditions are changing, so we do anticipate slight drop in the oil prices. Currently, we don't have any clear indications of the real concerns, like for macroeconomical conditions. One is the Russia-Ukraine war, which we don't have clear indication that is cooling off, although they have consolidated on the eastern side way more now. And we do expect this war to linger on. Second is the supply chain disruption due to COVID and reopening story of China, which is still not product producing things at the rate international community would want. And definitely inflation is very high. Commodities are going up. And anybody who heard Fed today, his focus is to increase to bring down the inflation to 2%. Our current unemployment rate is 3.6%, and we are ready to see it to go to 4.1. Even in the hearing today, everybody is concerned about joblessness claims, which still are under very very good tight control. So we don't have any handbrake yet, which the Fed will pull in case he sees unemployment rate going up. But unfortunately, because of all these macroeconomical conditions, the only thing he can do is increase the interest rate to kill the demand. And in the process, some of those companies which are cash dependent and our micro cap companies will be under tremendous strain. As you can see, some of those companies, even good companies which were launched with special purpose acquisition, which we call SPAC platform, are trading at 1/10 value, like at 10%, 20% values. There are companies which are 50% values, and even high growth companies are very at 50% discounted prices. And the value, the growth sector now looks like a valuation sector at this point. Anything you touch which is growth oriented has balance sheets which doesn't have earnings for next 2 to 3 years is being crushed. So street has no appetite for companies which are banking on growth only. They want to see the cash, and unfortunately in the process a lot of micro caps, micro caps will go belly up, and that will strain the market. But on the other hand, the sooner we come bring down the inflation, the better it would be. Are we like you guys are writing deflation? Are we close to? We are out of the woods? I don't think so. I think with every day the concerns of recession are increasing. Say 3 months ago, if somebody spoke, I would say it was 15-20% concerns. Now we can confidently say maybe 40 to 50% likelihood that our economy can go in recession. But how deep recession would be, how long it would last, that's a $1 million question. And Fed currently is very strictly is very strictly and very focused on bringing the inflation down to 2%, and whatever measures needs to be taken. So next interest hikes, we do anticipate 75 basis point, if not 100, if not more than 75, maybe even 100 basis point. And you saw what happened to the market 2 days ago. That was like a bear market, response, like a dead cat bounce. And today the market is again going down. From this point, we do anticipate another correction of S&P, maybe 20% to 3400 value, and Nasdaq to pre-COVID values, so approximately 8,000. So even good companies, if you look at their numbers, starting from Apple, Microsoft, Google, Amazon, I think they still have some froth to shed, another 15-20%. In the process, the companies which are hyper growth companies not making earnings, don't have strong balance sheets, probably will be crushed even more than that number. And we do anticipate this may linger on till 2023. So at this time, I mean, I guess you guys are talking on Indian markets, which is a little better. Overall, Indian economy is doing a little better because of the risk stratification. But anything speculative is highly recommended to reassess twice your risks, including alternative altcoins, cryptos. Any speculative plays is being punished by the market right now, and I don't think so. The pain is over, but good companies will come out as winners. So I think this is the time to reassess your portfolio, look into the hidden gems, companies with good cash flow, companies giving dividends if you see them at good valuation. And if you're for long term invested, this may be a good time to start reassessing your portfolio. Thank you for letting me share the information and speak. Thank you.
Yeah, thank you, doctor. Thank you very much for a very comprehensive bird's eye view of the topic. Yeah, we are focusing more on India, though I understand US may still fall, is what you're saying. We are thinking from the Indian point of view. Thank you once again. Vipin, if you want to say something right now itself, you can say, because this may take time, Vipin bhai, you're there?
Yes, sir, I'm here. नो प्लीज, ये जो लोगों के क्वेश्चनरी हैं इसको चलने देते हैं पहले, फिर देखते हैं आखिरी में क्या करना है, कंक्लूड.
Yeah, okay.
जी.
Right, sir. Mr. Nitin.
Yeah, good evening, everybody.
Haji, good evening.
Good evening. Yeah, actually, sir, I just wanted to highlight the last 3 months, the markets, or severely last, I would say a month or so, markets have taken, big beating because of PE compression. Let's not take Nifty as a barometer, to see what's happening. Major damage has been done in the other side, the internals actually. The broader markets, I would like to say. If you take out Reliance and ITC right now, the indices are, way down actually. So we need to see what's the difference, what's different that has happened in this period. It's actually the money supply that's been sucked out. And that's been a very big factor of the valuations that our markets have commanded over the last 2 years, especially after COVID. If you see pre-COVID, our high was 12,500, and post-COVID we touched 18,600 actually. In worst of situations, just because of abundance of money supply and of no alternative asset to invest. But what has happened? This inflation scare has created an alternative in US 10-year bonds, especially at a risk-free rate at 3.20. That's very lucrative for our FIIs, and that's why they've been on a selling spree since October 21, especially. I would like to disagree with Sanik sir on certain aspects. Like sir is stating disinflation is around the corner. Sir is taking the data, especially from the peak that occurred in February, March of crude 134. But if you would, go back and see in October 21 itself, Fed announced stopping of quantitative easing when crude was $80-$85. On an average, it was around $70 in that month. And if you take out for the last 15 years data, the major bottoms in our market has been formed on stimulus packages or announcements of QE. No package in the history has been announced when crude oil is at $100 ever. Right now, the problem with Fed is it's very political. Biden is heading into elections in November 22. And the inflation is the main talking point right now. Still, if you compare year-on-year data, crude is still 40 to 50% up from October 21 levels. Wheat was at 750 odd levels. It's still at 1,000 plus. So if you're taking the data from the peak, we're still, way up. I don't think so. Disinflation is anywhere around the corner. You might have a base effect that will only kick in from December 22. You have a window of another 2-3 months. You would be having a window from December, to March. That there, if you would see, then you can say, okay, disinflation is there. But still, right now the prices are way high. Natural gas is tripled absolutely. For Europeans, it's gone through the roof, and especially ruble, it's appreciated from 150 or to 50. They have been hit on both sides. Europeans are in a very big mess right now. So what has happened, why, although our macros, and locally we are doing pretty well, if you see our markets are outperforming. We haven't gone down 20% yet also. Hello?
Yeah, Nitin. Yeah.
Can you hear
Once
me?
you finish,
Sorry.
I'll reply to that.
Sure, sir. Although we are outperforming the other markets, especially Nasdaq and Dow, also we haven't still gone down 20%. Other Dow is in bear territory. That's a very positive sign. But the point is, we are outperforming, but both still on the downside itself. Once we hit the lows, and what will be the tell sign, I would share that we need to bring bond yields down. That would be the first sign that something okay. And European natural gas and US natural gas prices are two different things. Let's not get confused into that thing. Okay, US natural gas is down 27% only because of the reason they are not exporting their gas to Europe. European natural gas prices are totally different. They have gone through the day natural gas prices fell in USA 17%. The same day the prices were up 40% in Europe.
You know why?
So, sorry, sir.
There was an LNG, there was an explosion in an LNG plant.
Absolutely true.
So that was 25% capacity of the United States went away in one stroke.
Very true.
Nitin, once you speak, I'll quickly answer your queries.
Sure,
if
sir.
you finish, I'll
so
be ready.
very true. So the inflation scare is not yet out. In Europeans, they are suffering even more. So what is the resolution for this? When markets can bottom out, I will give my viewpoint and the same. We need a political resolution on this, because capacity is not going to come overnight. Or 15th of July is an important date. Why I am stating that? Because the US president is visiting Saudi Arabia. Right now, the relations with Saudi Arabia are very bad actually. After that, the journalist death that took place. So, if I will share an example, when last time Russia attacked Crimea in 2014, Barack Obama ensured in 6 months crude fell from $120 to $20 or $30 odd. They never imposed any sanctions on Russia or anything. That broke their back very badly. Right now, what they have done is $1 billion. They have made sure Russia is having an inflow of $1 billion a day. So it has strengthened their position even more. That's why it is what do it's in saying, it is promoting them to extend this war even further. If they bring down oil immediately, Russia will come back on the negotiating table ASAP, because there is no pressure from the public on the Russian rulers and even China, both. And the problem here is the Western countries are facing the pressure first. Example we saw from Macron, he lost his majority 3-4 days back only. So the European leaders are in a lot of pressure. But the point is, the ball is in the Russian court. They need to come on the table. European countries want a settlement right now, but is the other party ready? Right now, it is not, because their currency is at 7-year high. They are making more money than ever, even though they have lost 2 million barrels a day, but still they're making ample amount of money, and they're inflicting pain on the parties they want to. So disinflation right now, sorry sir, I would disagree, because zinc is still above October 21 high. Copper is at 8-month low, but you take it from October 21, where the Fed announced a quantitative withdrawal. It's still way above. Commodities need to come down at least 20-30% from these levels. And recession would not be a bad thing for us, because that will bring back QE on the table. And recession will ensure lower commodity price for us. And going forward, if we want to find out stocks for next bull market, that would be from the local economy. That's what my point of view is. Banking will do extremely well, because since inflation will be controlled, your banking will just do enormously well. Your local economy stocks, auto ancillary, auto stocks, metal consuming sectors, especially like your building materials, because they had enormous growth last year, but they didn't have the margins. Now you will see no growth maybe, but their margins will be doubled. So that will be the sector to watch
Okay, if
out.
you're finished,
Yes, sir.
I want to
Sure, sir.
respond. Yeah, if you're
I'll
finished.
cut in. I'll cut in.
Yeah. So you made so many points. So I'll try to quickly answer a few of them at least. Probably you were not there when I began. I don't like to repeat it, but nevertheless, let me repeat it. You talked of, some stimulus should be there for the equity markets to go up. Is that what I understood? If I understood that right, let me tell you that between 2014 to 2020, there was no stimulus from the Fed. QE was not there. And we had 9 interest rate hikes between 2014 and 2019 by Fed. We also had a quantitative tightening by Fed between 2017 and 2018. And for 4 years, 2015, 16, 17, 18, we had a net FII outflow. Okay, this is as far as provisional data given in money control and from the NSE website. I have taken that data because the SEBI data includes IPO numbers. Now, talking about why did I take from the peak? Inflation is measured on a point-to-point basis, on a time-to-time basis. So let us say in the stock market, Nifty we saw at 18,600. When it came to 18,000, if you are not scared, saying that it was last year it was 12,000, so we're still 50% up. Most people thought like that. Most people thought in that manner. But I didn't think like that. I said it has come from 18,600 to 18,000. There is a problem in the market. So I was expecting lower and lower prices. And finally, at 15,000 to 16,000 level, people are now believing we are in a bear market because their definition of a bear market is 20% lower. Only when it comes to 20% lower will I look at it as a bear market. If that is very good if you're a theoretical person and not in the market. Unfortunately, people like us are in the market for the last 31 years. For us, when we see some trouble, we run away. Similarly, when we see something interesting, we jump in. So if you take 18,000 from 18,600, one can easily argue, people argued till 15,800 levels. Even today, they're arguing, saying that we are not in a bear market, so why are you bothered? Whereas 50% of all NSE stocks are already dead. 50% and below they're gone. Means halved. They have halved. So what is a bear market? Maybe definition may be something, but are we feeling the bear market? I think we are feeling it. So when I say the prices have come down, we'll have disinflation, you have to be the first to identify it, or you have to be the early birds. Only early birds make money. People who bought at 17, 18,000 levels. I'm not talking of the index. I'm talking because people don't buy index. They buy stocks. Those guys are stuck because they are the late comers. So people today, instead of looking at it as a positive thing, if you are going to say, no, let it come down to oil, let it come down to 100 or 99, because after all, it was 75 just 6 months ago. So till you wait till 75, the equity markets would have taken off. And at 18,000 equity or 17,000, let us say 16,000 or 17,000, 16,500, whatever it is, they would have gone there. That is what history has shown us. So therefore, I am taking from the high only because I have said that if everybody is talking of inflation, if the inflation book is there, it should have made higher and higher highs. That is not what is happening in commodity after commodity. If I want to be an early bird, and that is why I hold these space sessions. I do not hold it after we have collapsed 20% or 30% or 40%. Last year, when I held my sessions, we anticipated that. We said, okay, now it's from 18,600, it's come to 18,000. You have to run away from the market. You can't run away from the market at 15,300. It is the wrong time to run away, is my assertion. And this has been borne by experience, and this has been borne by data. So it is quite possible that it may turn around and then the market may suddenly start shooting up. Sorry, the inflation numbers may start shooting up. The oil may start shooting up. Yes, that risk we have to take. When we go in front of the computer every day, we have to look at the risk based on our understanding at that point of time. Tomorrow, something new may happen. And whatever you are suggesting may also happen. oil may make a new high. So then all my argument may be completely a waste of time. But I am making at this point of time with the available information. Tomorrow, what happens? If there is a new development, obviously we have to change our mind. But today, to talk of development saying that inflation, recession, Powell, and oil, and all that is all yesterday's story. That is my humble submission. I completely appreciate from where you're coming from. It's always nice to have a counterpoint, because if everybody agrees with me, then there is no point in having these spaces. I always love to have a counterpoint. I take your counterpoint. Let's see on the time. It's just that I'm a premature kind of guy. I will anticipate. I mean, I've already seen it. I'm anticipating the direction. Direction for me is down for commodities. It is not telling me it's down unless there is something new. That's where I stop at this point in time.
Okay, so Sainik sir, I just want to come back to your point. I 100% agree with you on the inflation, deflation.
Arey Baba, don't agree with me. I just now I told
No,
don't
no,
agree. Why are you agreeing with me?
I'll tell you. Yeah, I'm telling you what my thesis is here. So the thing is that if you remember, when was the last time when deflation occurred in the United States? It was when the 2008 crisis happened. So they had a massive inflation of 5% around 2007 when the Fed raised rates. And when the financial crisis arrived, their inflation was down. It was a negative -2 or -3%. So that is what typically when you're claiming that deflation will happen, it will happen at a cost. Secondly, what I am trying to my major point on inflation over here is that it's not the velocity in this sense. It's that what happens to households in this environment. So if you see the credit card bills across the developed world, they are all shooting up because people are not able to meet their expenses with what they're earning, and or they're plowing into their savings to pay for their day-to-day expenses. And this is very true, very, very true in Europe, unfortunately, because of the kind of gas prices and kind of energy prices that are there. So that was my second point on the whole inflation bit. And yeah, so these are my two major points here.
I understand Black Swan. I understand. I also know the credit card delinquencies are there. I'm aware of all that. Surely the pain is not over. The pain is not over. Surely nobody can say the pain is over. In fact, the pain which started in subprime in 2008 is not over for many people in the US.
Exactly.
Right. But the stock markets don't care. The stock markets don't care. The stock markets are very cruel.
No, the reason why they don't care is because for all these years you had interest rates at zero. The Fed, you to tell
we
about
didn't have at zero, my friend. We did, see, this is where please go back and see 2016. 2015 onwards.
That was
the interest rate went up 9 times.
Correct. Yeah, Yellen, but they were very small. Yeah.
What very small?
But they stopped
no, sorry, 9 times. 9 into 25 basis into 9. Please do the calculation. Hey, come on, I've continuously repeating that this is so therefore what is the argument? The argument here is from zero it may go somewhere. It may go to 4%. Let us assume. From there it went from 0 to 2.5%. But it did go. It was not zero. So if you go by the hypothesis that it was zero, that is not correct. No, the reality is that it was not zero. It was 9 times it was raised, and a quantitative tightening happened. Now you may say, okay, that quantitative tightening was a smaller
16%. 16%.
No, whatever I'm just saying. I'm just saying. No, we can argue anything. But was it there or not?
Of course it was.
But what did the market do?
So it triggered a repo crisis, right? You had a flash crash in 2018.
No, wait. What did the market do between 2016 and 18? Kindly go and check.
Correct.
If I were to tell you,
I don't deny it at all.
That's all. No, that's all we want to know. No, as market participants, as market participants, what are we here for? We are not here to debate what is the definition of recession, what is the definition of inflation, or when will deflation come. So we are here at the end of the day to decide whether to buy tomorrow morning or sell. See, today we are having gloom and doomers who are telling us that market will collapse. I am saying this is not the time to be in gloom and doom. These are the reasons why you should not be in gloom.
True.
So I said, from inflation you come to disinflation and deflation. Deflation is the last step. We are not going to jump from inflation to deflation. Nobody can do that. It doesn't happen like that. First you have disinflation. First you have reduction in inflation. Then only deflation. No, how can it go from inflation to deflation? I have not seen anything like that.
Yeah, that's what I was just coming back to the credit card delinquencies and the not only delinquencies, the size of the credit card and revolving loans across the developed world have jumped a lot.
I know, sir. I know you know. I know everybody knows it. The market has priced it in to some extent. If there's a new thing, let's say some big crisis comes, then we will have to worry. My limited point is that, see, we don't know tomorrow what will happen, but we have to take one view at least at this point of time. Okay, and then that is the view I'm taking. Now it could be completely wrong. Okay, but I am happy because I have got some data to suggest that this is the right way to, and this is my way to look at it. It is not the right way. It is my way. That's all it is.
Fair enough. I get your point. Yeah.
Thanks, sir. Thank you, Mr. Nitin.
Yes, sir. If I could add just a closing comment, as you rightly said, we have to be preemptive in finding out, stocks, and rather than after stocks falling 20-30%, pointing out certain things. Certainly, I did the same. If you go back, October 21 was a very big month for the markets, especially it topped out here at 18,600, and another event took place that crude broke out above 85 at a 7-year high. That commodity which has the maximum intervention by the politicians, it broke out. You remember, if you could see in last 7 years, whenever it used to go up around $80, Mr. Trump used to tweet and it used to come back, and it was only possible because of its good relationship with Saudi Arabia. That's why I highlighted 15th July is an important piece in this jigsaw, in this puzzle or this game that's been going on, because he's going to meet the Saudi prince. He's going to meet up.
Nitin, that has been discounted by market. You know it, sir, I know it. He's meeting, right? Sir, he's also he's also talking to the Chinese premier. See, these are all known factors, is what I'm trying to say.
My point is, right now the Fed is trying to either save the bond market or equities. That's the dilemma it's stuck in, and clearly its vote goes out to bond markets because the amount of money that is involved in bonds is humongous. Equities has always been a beneficiary of what they have tried to do with bond markets. If you would see, a percentage of money only trickles down into equities over the years. It's always been about bonds.
Point. No.
Yes.
I take your point.
So the indication. So for the bullish indication that you were talking about, I would only suggest follow the bond yields. They would give you the signal. Okay, US bond yields especially. Right now it's still above 3.2%. Let it give us a signal, Nitin, and follow.
Yeah,
yes,
Nitin.
Yes, sir.
Nitin, I know that the Fed has got a choice between equity and bonds. That is a well-known thing in the market. Anybody who is a student of the US market knows that. Okay. Now, Fed has already destroyed the market, equity market. If you think they have not destroyed the equity market as of now, then I would suggest that you go and look at the data. The data shows.
But their mandate has not yet been achieved, sir. They want to bring down the yields.
No, wait.
First, yes.
No.
That's the wrong point, I think. Senex, sir, please.
Wait, 1 minute.
Yes.
Yes. They have already destroyed the equity market. That is my point. See, kindly go and see. Nasdaq is the what shall I say? Is the one which really moves. I'm not able to get that. And so it is very sensitive to the let's say the market to the authorities. You see, what has Nasdaq done now? It is 35% down. 35% at the macro level. Nasdaq is down. Look at the stocks in between. Take this our Katie Woods. What 70%? So many stocks are down 60%. If you go back and look at history, this is only the third time. Only the third time Nasdaq has fallen more than 30%. The first time was in 2000. It deserved it. 2008, it deserved it. In 2022, many things didn't deserve it, but because Fed wanted to crush risk, so they have crushed Nasdaq, or rather, they crushed money into Nasdaq, and that's how it has fallen. See, I would say this is the first time.
Yes, sir. Yes.
This is the first time in history of Nasdaq that Nasdaq has fallen without any reason, excepting the Fed wants to suck out liquidity, and it has happened. Now, if you say no, Nasdaq will fall another 50%, yes, it may fall. I don't know. I don't want to argue on that. But if it falls 35% without any rhyme or reason, excepting because it had to satisfy the Fed's ego to support the bond market, I think it has done enough. That is my thinking at this point of time. Now, in terms of the yield, 10-year yield has fallen from 3.5 to 3.16 today. Okay. Now you may say, no, it should fall to 2.8. But before it goes to 2.8, it should go to 3.16. No, it can't suddenly go from 3.5 to 2.8. No, it will go. I believe it will go to 2.8. but it will go slowly. 3.16, it may go to 3.24, again it may go to 3.18. That's how I am looking at oil also going to $85. It will not go suddenly tomorrow morning. It won't go. Markets don't work like that. No, whenever they work like that.
Absolutely true. So that's what I was trying to say. See, if we can correlate the bond yields price action with our equities price action, we would get a better answer. And that's the worrying point for me, that even after destroying the Nasdaq for 35%, they haven't been able to get their bond yields below 3%. Their mandate has not yet been achieved anywhere. They have to
No,
keep the
it will
dollar.
come. It will come. You
Sir,
should have patience.
that's
See,
Nitinji,
that,
what is their mandate? Okay, what is their mandate? Just wanted to ask a
yes,
question.
sir.
What
Their
is their
mandate is they're trying to bring down bond yields,
okay?
and
At what
that
rate? At what rate, sir? What rate do you think is their mandate? Have they specified any rate?
sir, they're looking for normal inflation of
What
around
is normal,
2%.
sir? What is
So
normal?
that's normal for them.
And what is
That's
it?
what.
Yeah, that's what I'm asking
correct,
you. What is
Nitin.
the
See, Nitin,
Yes.
correct. See, correct. See,
So I am assuming, I'm
it
not
has to be
saying it should
gradual.
come down. Yes, that's what
No, it will
I'm
come
just trying
down.
to
It will
say.
come down.
Rather than bottom fishing, I'm only saying, rather than bottom fishing, I'm sure. Okay, sir has a bullishness bias. I'm suggesting, if I would be in sir's position, I would try to correlate our price action with the events that are taking place. How your bonds is reacting, how is Nasdaq reacting to the bond prices, and how is our markets reacting to the same. Right now, that correlation hasn't shown any positive, divergence. That's what I'm trying to say. We haven't seen
No, no,
any
okay, point
positivity.
taken. No, point
Yes,
taken, Nitin. I
yes.
don't argue on that. We
Sure,
just
sir,
leave it
sure,
at
sir.
that. Because see, no, you are approaching it from a point of view saying that this is not the right time to buy. For me, this is the right time to buy. That's all. That is the difference,
Sir,
right?
point taken, I guess.
You are a
Valid point.
seller and I am a
Yes.
buyer. So it's
My
okay.
only
One of us will have to be right. With
my
God's
only
grace,
point is, sir,
both of
that
us will be right.
even after 35%, if as we compare the history, after 35% falls, Fed used to step in, and they have been the ones who helped them make the bottoms also. So, but this time around, their hands are completely tied. That's what my point is. There is
I
nobody to
take your
buy the
point,
dip.
Nitin.
Right,
Yes,
sir.
I
yes.
Right,
take
sir.
your
Point
point,
taken, Nitinji.
Nitin.
Point taken.
Point
Point
taken.
taken.
Let's
Sure.
leave it at that. Let's leave it.
Okay, sir. Okay.
It's
Thank
okay.
you.
It's okay.
Thank you. Mr. Anilji?
Hello. I, I, I'll just make a few points because I don't have much data. Somebody said that Indian markets have not gone down much. If you just check today's data of listed 4,121 stocks, average stock is down by 39%. So let us not go by couple of stocks in Nifty. Average stock is down by 39%. So it is no way we can say that we have not gone down much stock wise compared to other countries' stock exchanges. Second thing I will say is that Andrew Holland, who of Avendus, who runs the largest long short hedge fund in India, he says, and I have just been listening to him sometimes back, today only, that markets are heading towards certain deflation by end of the year. So it is not that it may not be visible today, but it is definitely visible that by end of the year he has gone on record on that it is heading on deflation, and is the largest long short fund CEO. Next point I will say that I was just reading Citigroup economists report, which has come today only. So Deutsche Bank and Citigroup, Deutsche Bank is also separately said, but Citigroup's report I read, they are forecasting chance of a global recession nearing 50% right now. With one more rate hike, the chances can be even more. So, by most of the people are of the opinion that number one, we have fallen down a lot. Number two, uh, recession or disinflation definitely is going to be there by year end. And if we can take year on year data on commodities, but if you look at month on month data from any of the good websites of the top 20 indices or top 20 uh, highly traded commodities, month on month we are down by almost 8% right now on an average of these. Uh, so I am recommending to all my friends, whosoever, and not I'm recommending, even the small investors also are recommending to me. I don't have cash left. I'm more than 95% invested. I don't have much cash left. But many people are uh, going for buying the stocks. And I'm of the opinion, no matter whether the market comes to 15,000 or maybe 14,500, 2 years down the line, 3 years down the line, like you are never going to see 23rd March to 2020 stock prices again, no matter what happens. Similarly, this 14,050, the stock prices which are there today, 1 year down the line, you are not going to see. So maybe you are very, very smart. 3 months down the line, 1 month down the line, you may get something lower and you may buy. But on an average, you are not going to see these stock prices 2 years down the line or 3 years down the line. That's all.
Sir, Bajpai sir, I will report you to SEBI. You are recommending and all that. Unless you promise me breakfast. If you don't promise me breakfast, I am definitely going to report. Please don't recommend things like that, okay? They will all make money, and what will you do then? If they all start making money because of your recommendations?
So I'm not recommending any specific stocks. I'm just telling go and buy whatever you can, whatever you like. Okay. Just make sure, just look at the 10-year chart also. It should not be certain cyclical stock which is there today at highest still, and you buy that, and then because of cyclicity it comes down. So I don't recommend any stocks, but I just said that okay. But more than me, I see that people are going and buying still. Maybe FIIs are selling very heavily, and definitely markets will not go up until unless FII selling reduces. Currently, still it is very, very high. The day it reduces or comes equivalent to DII buying, you will see markets jumping up. The day FIIs stop selling, it will jump up heavily, and the day FIIs start buying, Vipin's targets will all, even Vipin's target may go for the toss. And someday they will start buying. That's all.
Thank you, sir. Thank you very much. Thank you. Thank you very much.
Thank you, sir. Mr. Arpit?
Hello, Senex sir. Thank you for the opportunity, sir. Like everywhere, there is gloom and doom, and it definitely helps everyone to look at a counter perspective. So, thanks for sharing that, first of all. So, sir, one of the arguments which you bring to the table is that interest rates were risen from 2016 to 2018, right? And that's a very fair argument in the US. But along with this, there was a huge corporate tax cut which was announced in the US by the Trump administration, which brought down the taxes from 35% to 21%. So that should have been another factor which provided impetus to the stock prices, right? Along with not so high inflation in that era. So how would you see both of these and then try and draw parallel with what's going on in the current world? Thank you.
Yeah, thanks for that. See, Trump tax cut came, I think, in 2017 or something, if I remember right, not in 2016.
Yes.
Yeah, but the markets had already gone to the races by that time. See, 2016 February 6th, February 12th, I think, was the bottom for the Dow Jones, S&P, and Nasdaq. I think Nasdaq fell 20% by that time. The MSCI Global Index was down 20%. There was gloom and doom, and people thought there'll be no more stock market itself. And Ellen was panicking. She was looking at negative interest rates. But if you look at from February 12th of 2016 to say when Trump's tax cut happened somewhere in 17, the markets had taken off. And interest rates hikes were there. There was nothing positive in the markets. So markets can go up despite all this. Of course, Trump's tax cut helped. For instance, our tax cut here in 2018 helped, and 2019 here it helped. And 2017 market PSU bank capitalization help. They all help. But prior to that itself, the market had gone. See, that is my problem. You see, we keep waiting for some news to come and then we will buy. So I keep telling people, nobody rings a bell at the bottom of the market and neither at the top of the market. So we cannot expect somebody to come and wake us up and say, boss, bull market is starting, go and buy. You have to use data You have to use history, you have to use your judgment and your heart, the risk taking capability, and then plunge in. Because after all, you've got only two buttons, F1 and F2. You can't say, I want another button, F3, which will be cautious, or F4, which will say a bell will ring, or something like that. So it is not there. So you do with whatever data is available with you, and experience, and your courage of conviction. So today, my courage of conviction is very high to be on the long side and not to even think of selling it based on current situation. Now, tomorrow something good happens. By the time the market has already gone up, somebody was telling the other day that I will buy this market only if it reaches 18,000 because I'm very bearish on the market. I'll buy it 18. At 18,000, it's very difficult to buy because if you're bearish at 15,800 or 15,500, it is human psychology. We are not, people who don't have emotions. So having been in the market, I know how miserable I felt when I tried to time the market to the perfect. So I timed the market at 15.8. I said, boss, I'm not going to short anymore. It went to 15.180. No, the other day. Today also it is below 15.8. But I don't care because I feel I cannot time the market. This is the sweet spot for me to buy. So if what happened in 2017 happened after the market had moved significantly. So something good may come in 6 months down the line, but by the time if market has gone up by 1,000 points from here, it will be almost impossible for us to buy, sir. This is my experience. I'm not an expert. I'm just an experienced guy. I'm an ordinary guy in the market, having seen. I know our ego will stop us from buying. Somebody will say, boss, you missed it. Wait for some time. It will come down again. Don't you think that other big guys said it will come to 7,500? Why are you selling? I've gone through this. Whole 9 years I've gone through where I've listened to others and got bamboozled. I've written about it in my Twitter feed, and it had some huge number of people read about it. How I made mistakes. I write it regularly. So I made 30,000 mistakes like that in my trading career, which I don't think anybody can beat me on that. So out of 30,000 mistakes, one of the mistakes, or not many of the mistakes, were I waited for the right time for the bell to ring. The bell did not ring for me, and I missed such opportunities. So it can, some good thing come, bad thing may come. We don't know at this point.
Right. Yeah. Thanks, sir. So there's one maybe counter opinion on this, and that is my guess is that we definitely look for like not maybe exact sign like exact event happening, but maybe a symbolism towards that. So when Trump was campaigning, corporate tax cut was one of the prime one of the prime things he was promising, right? So his election kind of mandated that it would come, but when would the exact event happen, we never knew. Similarly, back in 2014, when there was all gloom and doom in the Indian economy and in the Indian political landscape was in turmoil, in that Prime Minister Modi's appointment gave this huge impetus, right? It was not that from day one there were any steps taken as such, right? Similarly, during COVID, the huge boost, it was just announced that Fed would step in. It was not that they actually pumped in money, which changed the course. They pumped in money slowly and steadily over time, right? So as of now, the posturing is that they are withdrawing money from the market and they are raising rates. So do you think like we should, in some sense, look for any such symbols or not? Like just based on these like major turning points.
Okay, quickly I'll answer because I think others also waiting. See, first of all, Trump promising is like any politician promising. Okay, first. Second is, believe me, during that time, I took bets against 5 of the reputed political commentators. They said Hillary will win. I took a bet that Trump will win. So Trump's victory was not guaranteed. In fact, Time magazine had already put Hillary on the cover. I don't know whether you remember that. They had already put her on the cover. So the whole world believed that it will not be Trump will win. So how can we say that the markets had got that in mind? And
Right,
Mr. Modi
so
coming, so Modi coming, yeah, November 16. What I'm saying is,
after that, the major rally came. And November 16 was when he was elected.
Yeah, I agree. I'm saying, but the rally started from February 12th of 2016. That's what I'm trying to say. 7 months before that, it started. So, see, there, as I keep saying, in hindsight, vision is 2020. We can say, let's say the market goes to 17,500. Oh, Sainik sir said that day, I should have listened to it at 15.4. You will say that because I gave you data which looks very interesting if it goes to 17.5. But let's say it goes to 15.5, then you'll say, oh, this very spaces, don't go to Sainik sir spaces, all useless data he'll give. So it's all in hindsight, we will say he's a great guy or he's a useless guy kind of thing, right? So the data can be tortured enough to act whatever you want to. If I'm bearish, I can torture the data to show bearish. That's why I said I can tell you that 875 the Nifty can come. Why it will come also I can tell you, but it is not worth it here. That's not what we should be discussing here. So you can always talk about it like, see, sir, at the end of the day, in equity market, if you want to make money, you should have a good heart, not only good head. Head is the numbers which I'm giving you. Heart is where you know the jigger, the jigger. You should go and take a decision. Okay, you cannot have the decision paralysis. So no, I want that data, that has to happen, this happened, that time. So there will always be things which will not be perfect when you take it. Always on imperfect data only you take decisions. You never will get perfect data. Never. Because there's no perfect data anyway. Because after all, both the buyer and seller have got perfect data in the terms of the price. Both of them think that they are right. So it's perfect data, but still one of them is wrong. So it will always be like that. So I am not saying you should buy. I am saying I'm buying. And I bought. And I will buy. That's all, sir. That's the limited point. I completely take a point. I could be completely wrong. I could look like a fool. People may stop coming to my spaces. I may stop doing spaces. And all that is possible. But that's in the future. Let's see what happens.
Thanks for sharing, sir. So, as you correctly said, it's no one actually knows. It's just about forming a viewpoint based on data. And sure, thanks for sharing all the insights. Thank you.
Thank you, Arpit. Next, Mr. Tribhuvan. Mr. Tribhuvan, are you there?
Yes, sir. I think Sujal is there on the line, no?
Hello? Hello?
Yes, Mr. Tribhuvan, please go ahead.
Basically, I think like how the inflation has been going up and like central banks have been taking all the liquidity from the market. But the problem with this approach is that it can lead to stagflation in the economy because raising rates and all doesn't see what it does.
Oh my God, I got disconnected. Okay, we'll take the next. Yeah, we'll take the next speaker, Mr. Srujan. Yes, please.
Yes, sir. Sainik sir, we have detached from last week from the clubhouse, so where I have turned bear, so you are still bullish. So now that bear turning the bullish, sir. So for again, I'm bullish on the market. So tomorrow, if candle closes green, so I expecting that again we will see 16,250. So that kind of level again we can see, and not in the next expiry also. I'm expecting this month end expiry. So Nifty again can see somewhere around 15,850 to 16,200. So this is what my with a stop loss of 15,145 on weekly. So last time we have detached from the bull and bear, sir, but now I am again we are attaching with the same kind of views.
Yeah, thanks, Sujan. Thanks. See, I am like an elephant. It will take me a long time to turn. So once I've turned, it will take me a long time. You are like this, I don't know what you can say. You can turn this
I am
way,
like
that
cat,
way,
sir. I will jump both the sides.
Yeah. Okay. I am not in that category.
Fine, thank you, Mr. Srujan. Thank you.
Yeah.
Mr. Tribhuvan, sorry you got disconnected. Again, you got disconnected. I don't know what's the problem. Anyways, Mr. Jigar Shetia. Mr. Jigar? हैं आप नहीं आ रहा है इनका व्यूअर्स नेक्स्ट मिस्टर गेट
no get Finside you want to
no problem sir ठीक है मिस्टर Finside please go ahead.
Hi, am I audible?
Yeah, please go ahead.
Yeah, thanks for the opportunity. And I do agree with the Sainik sir that the inflation is now done because like there are three parts to it. So one is the price, which Sainik sir already mentioned about why not following that. Second part is the CPI data that we are going to see a downtrend on an year on Y on Y basis. Like, so that's something that's going to play. And thirdly, which I think most of them haven't covered, is the consumer sentiment. Okay, so I went through one of the data, which is the University of Michigan consumer sentiment. So that's actually near the 2008 low. Okay, I think in 2008 it was about 59 or something. Right now, it's 55. And the data that we have is from April only. We don't have the latest data, right? But depending on whatever has happened for the past 2 months, it should have fallen much lower as well. And so when you have consumer data and the consumer sentiment data that's so low, that's going to affect the prices that you see on the films, right? Because people are not going to buy it because they're going to postpone their purchases, they're going to postpone their businesses purchases. So that's going to again, take out the inflation part down. So, with taking those into consideration, I think inflation, I don't think it's kind of peaked out. Maybe we will see it maybe 2 3 months down the lane. We will see it in the CPI numbers itself. And when you get those CPI numbers into place, and why would Fed then raise rates after seeing that? Because they have two mandates. So one is the price stability. The price stability is already out of the box because we are seeing prices that is being going fluctuating haywire. And what we also see is we are seeing the second thing that the mandate for the Fed is what you call it as the inflation. So when the inflation drops and you start seeing the CPI numbers coming down, there is no need for Fed to keep raising the rates and breaking their own system. Why would they do that? So taking into those things into consideration, I feel that Fed is going to pivot. Maybe not in the next meeting, but maybe after the next meeting. And once that is done, I think the retail and then the rest of the folks who are participating in the market, they are going to realize that, okay, something has changed and maybe we are a bit too worried about that. And at that point in time, the markets are going to raise. But we are not going to see markets raising at that point in time. It's going to obviously raise much ahead of that. And that's when the optimism starts to comes in as well. So that's why I feel sometime in the near future, we are going to see prices go up again. And then we are going to see new all-time highs on Nifty. And I mean, Nifty is a subset of what we are going to see in the flows into the global market side. So when the US markets also recovers, that's when we are also going to see a recovery in the Indian markets. That's what I feel, Sainik sir.
Thank you, sir. Thank you very much for the nice way you explained. I agree with you. Those points I should have made that actually. Thank you.
Thank you, Mr. Harish.
Hi, all. Just let me know if I'm audible.
Yes, you're audible, please.
Okay, thanks for this opportunity. This is a quick observation on few things, rather giving a view as such, because there's a lot of data facts available. Everyone keeps observing these things, but on the hindsight, we all feel okay. This could have been done, and if I would have gone long or short. It becomes an easy call on the hindsight, but it's very tough to react on a given day. The other observation, what I've seen in the market is the big corporate houses, when I say, the fund houses, would come and give a comment either when an index is high or at the bottom. So even on televisions or on the media, there are quite a few fund houses which came up with a lot of spaces and as well as on interviews stating that here is a problem in state. We are with high inflation and funds are getting staggered. So a lot of things are happening from a havoc standpoint. So at this point in time, what I've observed over the past 13 years in market is definitely we would see either a high or a low when large fund houses come and give a comment on a particular high that it's too bullish or it is too bearish. So recently, last 2 days, I've seen large fund houses came and told about 180 where we had a bottom in place. So short term, I see a good rebound. But the only thing is what I observed, I stay in Bangalore, and a couple of things which I want to highlight is I don't see any meter. I mean, in terms of spending, the spending analytics hasn't come down yet from a consumption standpoint. So people are spending it as if there is no tomorrow. There is the inflation is high. In spite of that, we see a good number of spend. From either if I have to talk about from return to office perspective, though we have just hit about 30 to 35% return to office, but the traffic has enhanced a lot. We see a lot of two-wheelers and as well as the car uh, sales have either gone up or what we see on road. So I'm just talking from a what we see in our day-to-day life, like where exactly we are headed towards in spite of high inflation. Maybe we could have this stagflation for some bit of time, but the purchasing power has not been decreased. In spite of all this, we have just corrected to match up the averages. That's what I believe so. And we would have a PE expansion. The price to earning ratio would expand because the consumption from our given the demographic factors from the population per se and the consumption theme, what India possesses currently to the rest of the world is phenomenally good, and this would keep continuing for at least a good amount of time, say for about say 4 to 5 years, depending on good leadership to continue in 2024 as well. So this is my take in terms of PE expansion with a good growth rate. But the only worry factor is the geopolitical issues which can creep in again, depending on the energy war. This is something which we all have to keep in mind. Otherwise, from an India standpoint, I see a good consumption theme going on across all sectors. But the other aspect which I wanted to touch upon is we haven't seen a good revival on capital goods yet. So I don't know when that will kickstart. So Sainik sir or Vipin bhai, if you can just help me out with this in terms of capital good, so that that could have a good like contribution factor for many other sectors other than the service sector. What we see a boom currently. Thank you.
Yeah. Thanks, Harish, for the wonderful way you expressed your thoughts. Vipin Bhai will finally speak at the end. I've kept him as a final attraction. Otherwise, if he speaks earlier, means then nobody listen to me. So at least they'll be forced to listen to me. That's how I kept him there. He will, of course, I'm sure, elaborate on whatever you wanted. I think, Vinay, we've got one more person.
Yeah, yes, sir, Mr. Mr. Anshul.
Hey, hi everyone. Yeah, so I have a lot of observations, but those are all personal. What I have is a query is basically in current market situation, which is going on from last few months, we have been seeing. What do you think is the best hedge currently against the equity markets? Where shall we put the money so that we at least get some percentage? Because my portfolio currently is currently not hedged up against anything. So it's all equities or ETFs or mutual funds. Okay. Other than this FDs and all. So what do you think is the best hedge currently? Yeah.
Actually, I am not, I repeat, I'm not a SEBI registered advisor, so I'm not able to give you any direct answer. Let me give you an indirect answer. Okay. See, I am basically an equity man. So my life, entire thing, whatever I earned is only through equity. So I'm a through and through equity guy. But let us say I want to be safe in equities, as I call the safe risk. There's nothing like safe risk, but nevertheless. So I would like to buy equity which are having a good dividend yield. There are many such stocks which are having good dividend yield. My father-in-law asked me the other day, so whether SEBI prosecutes me or not, I had to advise my father-in-law, and I advised him 5 different stocks which have got a good dividend yield, consistent, so 10% plus, double digit. So that is one way of looking at it. So I hope my father-in-law is happy with that. Now, the other option obviously is to look at gold, for instance, which is also you can buy in the buy on the NSE. Other than that, I really don't know because I'm through and through an equity man. But that's about all I can say at this point of time. I can't see any other hedge. Like some people talk of balanced funds and people talk of debt. So debt is when I recommended those 5 stocks, that is like debt only. Actually, it's equity, but it is giving you dividend yield of more than 10%, or at least more than 8% on a consistent basis. So that is what I would do. But I am not done that, but I would do that.
Okay. Yes, Alex. So basically, yeah, definitely has a very low percentage of return. So 4-5% like that. So obviously, The ones
those stocks will give you 10. Those stocks will be double digit dividend.
that is better.
Yeah. Yeah.
Okay.
Thank you,
I
Mr.
think
Anshul.
last is
Sir,
Trendonomics, and then I think somebody was there.
सर दो है और
Thank
तीन
you, sir.
स्पीकर्स है. We'll finish it fast, sir. Mr.
Uh,
Prakash Kumar. Mr. Prakash. ठीक है मिस ये कौन है अनुषा. If they're not there, then we'll do with Mr. Trend. He's the last one. ठीक है ये भी नहीं है. Mr. Trendonomics Dikshit sir.
Yes, sir. Thank you, sir. Thank you for giving me opportunity. Uh, bye inflation. Yes, probably. So I'm watching bond yield, US 10-year bond yield, and it is giving a sign that it is probably topping out. Obviously, it would be too early to say because it's too early because we still don't have much visible bearishness in the bond yield on charts. But from the cycle point of view, what I'm looking at, I see the uptrend cycle is now completing, and we should be seeing a good reversal going ahead. So maybe 6 months down the line, we will see it coming below 2.5 or maybe even below 2. So in that sense, probably yes, bye inflation. And a couple of macros watching. I'm watching the dollar index, so it is giving same sign that it should be reversing. It is into the almost giving a reversal sign. Yes, it's early to say, but of course, I believe in cycles and cycles repeat. I'll wait for the actual reversal to happen. But I firmly believe that it's going to happen. So I'm watching a couple of markets, US markets, Nasdaq, Dow Jones, S&P, and of course a couple with our markets also. So all the markets globally are giving somewhat sign that yes, there might be a short-term pain. Yes, there might be a short-term pain. No one knows where is the bottom. But if someone is saying that there is going to be a prolonged bear market, it's not going to be. We are near the end of tunnel, and if you are investor, I think one should start picking opportunities. We are getting a couple of stocks at a very huge discounts, and like if someone is only watching Nifty, he would probably say that we haven't corrected because the index has not corrected. Yes, index has not corrected more than 20%, but the stocks have corrected more than 50%. Some stocks have corrected 50-60%. Some stocks have corrected 40%. So the pain is into the broad market. The pain is into the portfolios, but not visible in index. So if the index is not correcting, you just cannot say that we have not corrected enough. Index is a synthetic product, and if you can't see the pain in broader market just by watching the index, then probably you are getting fooled by index. So the point is also I'm watching crude also. So crude is also likely to giving a. It has already actually given a reversal, and I see crude going to say $1.85. I see even natural gas has given a reversal, and I see going into $5. So maybe these macros are suggesting that inflation is going to be taken care of, and even coupled with the bond yield, I would say just wait for the real reversals to happen in markets, for the market to start going forming higher top, higher bottom formations, and then probably we can. Because there is going to be a prolonged.
Are you there? सैनिक सर आवाज आ रही है?
नहीं, I'm not able to hear him.
Okay, that's what. कुछ disconnect हो गए शायद.
Yeah. Then Vipin bhai, just to all yours. Vipin bhai?
Yes, sir. I think हाँ जी, I think सारे क्वेश्चन सब निपट हो गए हैं, तो इसको प्रॉपर अब मैं कंक्लूड करने की कोशिश करता हूँ और इसको हिंदी में करता हूँ. हो सकता है कुछ हिंदी लिसनर भी हो. तो जैसा कि आपके साथ डेटा पूरा शेयर किया, पूरे पिछले 15-20 साल के साइकिल को देखने के बाद इन्फ्लेशन का जो नंबर है, जिसको हम लोगों ने मॉनिटर किया था, जिस समय मार्केट पीक लग रहा था, पहले से ही इन्फ्लेशन राइज हो रहा था। जो भी इन्फ्लेशन के प्रोडक्ट हैं, चाहे क्रूड ऑयल हो, चाहे नेचुरल गैस हो या मेटल्स हो, फूड प्रोडक्ट हो, ये सब पहले से ही राइज हो रहे थे। मार्केट ने जिस समय पीक लगाया, ये लोगों ने इन्फ्लेशन के जितने भी टूल्स प्रोडक्ट थे, इन्फ्लेशन राइज करने के जो जितने भी रीजन थे, ये ऑलमोस्ट 50% सफर ये पूरा कर चुके थे। उसके बाद से मार्केट ने जब वहां से पीक लगा के जब वहां से करेक्शन स्टार्ट हुआ अक्टूबर में, तो इनमें कंटिन्यू बाइंग चलती रही, क्रूड अपवर्ड रहा, पाम ऑयल, जितने भी चीजें हैं। अगर आज की डेट में देखा जाए तो जितना मार्केट करेक्ट हुआ है उससे कहीं ज़्यादा, कहीं बहुत ज़्यादा करेक्ट आपके इन्फ्लेशन के जितने भी, चाहे क्रूड हो, चाहे पाम ऑयल हो, चाहे व्हीट हो वगैरह, जितने भी हैं, आयरन ओर हो, स्टील हो, ये सब उनसे कहीं ज़्यादा करेक्ट हो चुके हैं। तो यस, गुड बाय इन्फ्लेशन इज करेक्ट। जिस भी रीजन से इतनी तेजी से पीक आउट हुआ था, जिस भी तेजी से इतनी तेजी से शूट हुआ था, जहां से स्टार्ट हुआ, अगर हम देखें कि पिछले फरवरी मार्च में जिस तरीके से स्टार्ट हुआ था, उस प्राइस के भी नीचे जा चुका है, एक्सेप्ट क्रूड। पाम ऑयल नीचे है, बाकी सारी चीजें नीचे हैं, मोस्ट ऑफ प्रोडक्ट, इवन नेचुरल गैस भी। तो एक चीज और भी कहना चाहेंगे कि जब भी कभी भी इन्फ्लेशन हो या कोई भी चीज हो, कोई भी तरह से अगर बहुत ज्यादा कम टाइम स्पैन में वर्टिकली राइज करती है, तो वो एक किसी फियर में राइज करती है। क्योंकि अगर स्लो स्लो बहुत सॉलिड रीजन होता, अगर इसका इन्फ्लेशन राइज करने का जेन्युइन रीजन होता, तो ये बहुत ही स्लो राइज करती रहती है इन्फ्लेशन, और एक लंबा अरसा लगता है। जो भी जितना भी अपवर्ड आया है वो शायद 3 महीने में नहीं होता, 2-3 महीने में नहीं होता, वो पूरे एक साल में होता कि कंटिन्यू हम लोग इन्फ्लेशन में राइज कर रहे हैं। तो जिस तरीके से वर्टिकली शूट किया था, हाँ, कूल डाउन हो चुका है पूरा। जो डेटा का जो कैलकुलेशन होता है गवर्नमेंट का, चाहे वो यूएस का हो चाहे यूरोप का, जो वो जब पिछले से कंपेयर करके, वो थोड़ा सा टाइम आएगा, 2 महीने 3 महीने बाद बहुत तेजी से वर्टिकल शार्प आएगा। अभी जो मार्केट देखें तो मार्केट में स्टॉक्स जो भी मोमेंटम में कोई बहुत ज़्यादा ओवर प्राइस हो गए थे, 50-60% का करेक्शन हो चुका है, जहाँ पे वैल्यूएशन जरूरत से ज़्यादा हो चुकी थी। तो मार्केट अगर देखें उस हिसाब से तो बैलेंस जोन में है। इन्फ्लेशन के जितने भी रीज़न हैं वो भी अब बैलेंस जोन में खड़े हैं। तो हाँ, डिफ्लेशन को लेके थोड़ा कंसर्न हो सकता है, क्योंकि डिफ्लेशन उल्टा मुझे एक्चुअली निगेटिव लगता है। तो डिफ्लेशन को लेके मैं नहीं बोलूंगा कि वेलकम टू डिफ्लेशन, बिल्कुल नहीं हो सकता। हाँ, इन्फ्लेशन ओवरशूट की थी, वो हमारे इस रीजन में आ सकती है कि हमारे कंफर्ट जोन में आ जाए वापस। जिस तरीके से कंटिन्यू प्राइस अगर फॉल हो रहा है, तो ये बहुत जल्दी मेरे ख्याल से 1-2 महीने में कंफर्ट जोन में हमारे आ जाएगी। शायद $100 के नीचे सस्टेन करने लगेगा क्रूड, नेचुरल गैस भी कंटिन्यू है, पाम ऑयल, सब हर जगह से हमें सिग्नल बेहतर ही मिले। तो रही बात अब मार्केट की, तो मार्केट में अगर हम इंडेक्स का पीई देखें, जो हमारे मेन कंपोनेंट है, उसके हिसाब से हम देखें तो हम बहुत ही चीप रेट पे हैं कंपेयर टू फरवरी। हम फरवरी में हमने पीक लगाया था, ना कि अक्टूबर में। कंपेयर टू फरवरी हम मोर देन 50% बिलो हैं। तो मार्केट उस हिसाब से इंडेक्स चीप लगता है। स्टॉक्स अगर हम देखें तो हमें जिस जिस भी तरीके से बैंक देखें या बैंकिंग स्टॉक स्पेशली काफ़ी चीप लगते हैं। तो इन्फ्लेशन का जो डर था, जो भी मार्केट में डर था, वो मुझे लगता है कि वो ख़त्म हो जाएगा आने वाले टाइम में, जब नंबर्स चेंज होंगे। और यहाँ से बाइंग ही बनती है, बिकॉज ऑफ द मेन रीज़न कि जिस कंसर्न से ये पैनिक हुआ था। दूसरा एक चीज़ और कहना चाहूँगा कि अगर आप एक साइकिल देखिए, तो हमने 2011 के बाद से एक डीप करेक्शन हुआ था 2011 में। उसके बाद जब हम जिस तरीके से हमने 2015 में हाई लगाया, फिर 2018 में हाई लगाया। अगर मैं डेटा को रिप्रेजेंट करूं, एक हायर वैल्यू आपको हमें 2019 और 20 में मिलती है, लेकिन अगर सच में इन्फ्लेशन एडजस्ट डेटा कर दें या करेंसी एडजस्टेड डेटा कर दें, तो हमको 2019-20 में कोई हाई नहीं दिखता है। हमें सिर्फ जो दिखता है हाई, वो 2018 में लिखता है। तो अगर उस हिसाब से अगर हम डेटा को देखना शुरू करें, तो हमने करीब 6-7 साल की साइकिल थी। 11 के करेक्शन के बाद से 12, 13, 14, 15, 15 में हमने एक पीक आउट किया था, वहां से एक शॉर्ट टर्म करेक्शन आया था। कुछ अगर आप प्राइस वाइज देखते हैं तो वो आपको 12 महीने का दिखता है, बट अगर आप उसको करेंसी डिप्रिसिएशन को एडजस्ट करते हैं तो सिर्फ 7-8 महीने का फॉल था। जैसे अभी हमने 9 महीने का फॉल हो चुका है, जिसमें अच्छा खासा क्रैश हुआ था, 40%, कोई 30%। सारे स्टॉक्स जो भी मोमेंटम में भागे थे, जिस समय 91-19 का हाई लगा था 2015 मार्च में, तो वहां से जितने भी थे सब काम डाउन हुए थे। और उसके बाद जो मोमेंटम हुआ था 2016 से, हमें यहाँ से उसी तरह के मोमेंटम की एक्सपेक्टेशंस होती है। और ये अगले कम से कम 12 से 20 महीने के अंदर पीक आउट होने की संभावना लगती है। तो मुझे लगता है कि हम बहुत ही बेस्ट लेवल पे हैं। बट हाँ, ये शॉक मार्केट है, इट्स नॉट स्टॉक मार्केट, इट्स अ शॉक मार्केट। एक कंसर्न तो होना चाहिए, जिस भी कारण से अचानक से इन्फ्लेशन अपने नॉर्मल रेट से बढ़ने की बजाय बहुत ही वायलेंट लेवल में इम्प्रूव हुआ, वो था यूक्रेन एंड रशिया का रीजन। कल को कोई और रीजन आ सकता है, कभी भी आ सकता है कोई भी रीजन। तो कहीं न कहीं पे एक कंसर्न रहेगा कि हाँ, अगर कोई बीच में अचानक से आता है तो हम क्या करें? ज़ाहिर-सी बात है कि अगर जो भी प्रीवियस अभी लो लगे हैं, अगर इसके भी नीचे 2-4% अगर मार्केट जाता है, टिकता है, तो ज़ाहिर-सी बात है कि हम किसी मुसीबत में हैं। लेकिन एकदम जो लेटेस्ट डेटा है, जिस तरीके से क्रूड का क्रैश होना, ऑलमोस्ट $100 आ जाना, जिस तरीके से पाम ऑयल का क्रैश होना, यहाँ से लगता है कि मुझे लगता है कि मार्केट इसको सँभालेगी। मार्केट नीचे में नए लो की तरफ नहीं जाएगी। एक 15,000 बहुत ही बड़ा साइकोलॉजिकल लेवल होगा। मुझे नहीं लगता कि इसके नीचे मार्केट जाना चाहेगी या टिकेगी। तो एक रिस्क के हिसाब से कि हाँ, अगर 15,000 के नीचे जाता है और अगर मेरा इन्वेस्टमेंट है और उसमें 8-10% का लॉस हो रहा है, तो मुझे वहाँ पे कंसर्न होना ज़रूर इम्पोर्टेंट है कि नहीं, क्या हो रहा है। और रीज़न भी सामने होना चाहिए, और रीज़न कितना ठोस है। एक टेम्परेरी बायसनेस है, इन्फ्लुएंसर का बायसनेस है, या जो छोटी-मोटी बातें हैं, क्योंकि छोटी-मोटी बातें मार्केट बहुत आराम से डाइजेस्ट कर लेता है और उसको पता है कि कैसे रिज़ॉल्व करना है। तो मेरे ख्याल से हम बहुत ही अच्छे मीन लेवल पे हैं, एक बैलेंस लेवल पे हैं। यहाँ से हमें मिनिमम 50-60% का, 70% का एप्रिसिएशन दिखता है इंडेक्स में। हमने पिछला एप्रिसिएशन 150% का लिया था कोविड के लो से, तो मिनिमम इसका आधा कि 60-70% का एप्रिसिएशन हमें आगे मिल सकता है। तो कंफर्ट लेवल भी है बाइंग के लिए। बट हाँ, आपको मार्केट में चाहे कितना भी कंफर्ट हो, एक कॉशन लेवल हमेशा होना चाहिए। तो एक कॉशन लेवल आपको हमेशा लेना चाहिए। 15,000 एक सेंटिमेंटल, टेक्निकल, मल्टीपल लेवल से है। अगर वहाँ पर इतना सस्ता होने के बावजूद भी अगर कोई कंसर्न हो रहा है और फिर भी मार्केट में बिकवाली है, तो वो सीरियस मैटर हो जाएगा। तो 15,000 के नीचे अगर मार्केट जाता है तो आपके लिए एक मेजर इश्यू बन सकता है। हो सकता है कि कुछ हिडन मैटर हो, जो चीज़ें जग जाहिर ना हो, फिर भी सेलिंग हो रही है, मार्केट को कुछ ऐसा पता है जो हमें नहीं पता है। तो वो एक कंसर्न कंसर्न लेवल हो सकता है। अदरवाइज हमें यहाँ से 50, 60, 70% का मिनिमम एप्रिसिएशन दिखता है, जो यहाँ से 12 से 15 महीनों में हो सकता है। अगर आई थिंक सैनिक सर ठीक से कंक्लूड हो गया हो तो ठीक है, अदरवाइज अगर कुछ देना हो तो।
No, thank you, Vipin. I think everybody was waiting, everybody, including me, was waiting for this. You conclude brilliantly, as usual. So, chalo, we'll call it a day. Before that, I just want to say a couple of points. See, please don't take any scripts which we have mentioned by I don't think we have mentioned. Nevertheless, as investment advice. And also, please note that when we talk, we are talking of Indian stocks and not necessarily Indian index, and definitely not the global index. Basically, we have used global data to factors to what we should be doing here, rather than what will happen in a particular country. So, with all this, and if by chance I've been hard on somebody, my apologies. If we have not given sufficient time to somebody, my apologies again. Hopefully, the next time we will rectify it. Thank you, all of you who came here, participated in the discussion, and more thanks. I mean, greater amount of thanks to people who didn't agree with us, because that is the whole idea, to have people who don't agree. And this discussion was conducted in a nice manner, even though we did not agree on many points. And I personally learned a lot of things from people who participated and who spoke their heart out. And thanks, Vipin Bhai, for concluding the session. And thanks, Vinay, for efficiently managing it as usual. It's been really a pleasure to be associated with you on this forum. Thank you
Same
once
here,
again.
sir. Thank you.
Yeah, Vinay, just kindly close it off.
Yes, sir.
Do the honor. Yeah.
Sure,
Thank you,
sir.
Vinay. Thanks, everyone.
Good night, everyone. Thank you for
Good
attending
night,
spaces.
boss.
Thank
Yeah.
you.
Thank you.